is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, John Tucker as well, Lisa Mateo with us, of course, this morning as well. We're Cheez-Its free this morning.
Yes.
Huge response yesterday.
Oh, my goodness.
And
there are no Cheez-Its left in the studio, Tom.
With debt, almost to $30 billion as a transaction. Speaking of $30 billion, that's how many employees, $30 billion, that Wal-Mart has. They've just come out with earnings. Thanks for that side. Greatly appreciate it. Same-store sales, not Home Depot-ish. Same-store sales actually pretty good, but, Paul, the stock's trading lower, $2.68 down to a 66 level, just as you see these numbers.
Yeah, exactly. So, I mean, Walmart boosts fiscal year adjusted EPS view to $2.35 to $2.43. The problem there is the street was at $2.45 here, so a little bit light there. And again, it's a question of the consumer, Tom. Walmart is such a great barometer of what's happening with the U.S. consumer, and that's kind of how a lot of folks look at these Walmart numbers quarter to quarter.
Okay, for the global Wall Street, Robert Teeter's taking notes right now. Gross margin up 43 basis points. All you got to know is that's a good number, but there's some issues down the income statement, and you get rich. Where are we on a percentage basis here?
Stock's up 1% here, pre-market trading, so
yeah,
it's okay.
You know, it was 68, 66. Now we're up $1.50 to 70. We'll have to see where we go on that. Is the CEO of Walmart commuting from 1,000 miles away?
No, I thought you had to kind of be your headquarters, but apparently not. You can be anywhere you want, even if you're a CEO.
One of the offspring taught me how to do measured distance.
Yeah.
On Google Maps.
Okay.
1,000 miles from here out I-80. Have you ever driven I-80?
Oh, sure.
I-80, so it's if you're not American, if you haven't driven I-80 all the way out. And the answer is, good morning, Mitchellville, Iowa, just east of Des Moines.
Okay.
1,000 miles.
Okay.
From New York City.
Let's go. I mean, road tripping. We do a little remote broadcast.
Remote broadcast, and we're 1,000 miles away from headquarters.
Look at Walmart up 3%. So
up 3%,
I guess the street was, I guess we're looking for maybe some weaker numbers, so not bad.
Well, we'll get to that. We'll get to an earnings season. Gina Martin Adams, I believe, on the date calendar here today, and that'll be a good thing. Let's get right to it. Robert Teeter awaits futures up to the VIX. 16.55.
Wow.
From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You got it in futures. Right now pointing to a positive open on Wall Street after the S&P 500 extended its winning streak to a fifth day, and that was thanks to a mild CPI print. So right now, NASDAQ futures, little change, but up about 6 points. Dow futures up 75 points. S&P futures up nearly 2 points. Some positive Asian data also helping. Japan's economy grew faster than expected in the second quarter. China's retail sales also beat. Taking a look overseas, we have the Nikkei up about 0.7%. Over to Japanese yen, that's at 147.22 against the dollar. To earnings we go. You talked about it. Walmart boosts its full-year adjusted EPS view to $2.35 to $2.43, and the street was for $2.45. So checking in with Walmart, still on the rise, up about 5% right now. Tapestry, you know them, the owner of brands like Coach and Kate Spade. I know them, yes. Up 8%. They forecast adjusted earnings per share for 2025, though, that missed estimates. You have Chinese e-commerce retailer Alibaba. Their ADR's down 3%. They reported revenue for that first quarter that missed estimates as well. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much.
Tapestry.
Let's cut. Yeah.
That's an album you can recommend to anybody.
Yeah, we could go all day on that. Let's not do it right now. It's 7:04 a.m. We got to get to Robert Teeter.
Do we?
We do.
Okay.
There's just too much to talk about. He's really quite good at giving us a perspective, not so much on where we are, but where we're going. The money question: does this earnings solidity continue?
I expect it to continue. So we have an underlying economy that's transitioning back to about a 2% growth rate. That's typically consistent with high single-digit earnings gains. And we have some of this tailwind on the margin side. It'll be really fascinating in coming quarters, I think, to keep an eye on margins. We've had many years of analysts projecting that margins had peaked, and margins continue to go higher. Companies are just finding ways to be efficient and productive.
Corporations adapt. That's my religion.
Corporations adapt, and they've got a lot more tools to adapt with in the past few years, and going forward, they'll have even more.
I mean, again, the Walmart number, again, stocks, Walmart put up some numbers here today. Stocks up 5.5%. Folks look at Walmart, rightfully so, I guess, as a kind of a gauge of the consumer. How do you view the consumer out there, and how does that kind of inform your investment decisions?
It's a really nuanced issue on the consumer. So at the overall level, consumers in aggregate are doing fine. So most of the spending numbers that we see are fine. They're headed a bit lower than they had been in that post-pandemic boom, but the consumer's doing okay. You get a lot of anecdotal evidence that some segments of the consumer space, particularly lower income consumers, are struggling with inflation and struggling with wages slowing a bit, and struggling with these higher prices. So you get comments that get extrapolated out to the whole consumer when that, in fact, that's not the case. So we look at consumer as a pretty modest source of growth going forward here, especially as payrolls continue to expand, which is an area where payroll gains have slowed as well, but they're still increasing.
So, Robert, where do we go from here? I mean, if you're talking about a 2% kind of GDP world here, moderating inflation, presumably the Fed's going to be cutting rates here, maybe even as recently as soon as September. Where do you go here in terms of opportunities?
So it's a really interesting transition from an environment that had been fairly clear for a little piece of time to now a bit more unclear going forward. And the main reason for unclear is that Fed policy. With valuations where they are, we do expect some volatility going forward. Every data point is put under massive scrutiny, and if it tilts the equation one way or the other, you get a quick reaction, as we've seen in past weeks. So we're encouraging clients to be patient here, to allow the economy to unfold, to allow the fundamentals to carry the day, to allow that earnings picture to provide the growth, and just be a little bit more cautious and recognize that you'll have some volatility along the way.
In every course, there is a moment where there's a silence in the classroom where people go, I don't get what he just said or she said. I just really don't get it. And in business, it's operating leverage. Mm-hmm. I want to go back to fundamentals. Walmart's given me mid-single digit revenue growth at best. It's popping a 10-year total return in excess of 12%. How do they do that?
Yeah, so that's the margin and productivity improvement that we keep seeing unfold across the board. It's been many years now that people have underestimated the ability of companies to, as you say, adapt. And we had a big catalyst in the form of the pandemic where companies had to experiment with new technologies, new ways of working. That's continuing to pay dividends. And massive companies are really implementing things that aren't as eye-catching on the AI front as we might want to see immediately. They're not flashy, but they're improving probabilities of outcomes. So we've done a lot of work in the machine learning field to understand how that flows through companies, how they're using it to make better decisions. And those small incremental gains over time are what are fueling margins and earnings at a higher level than revenue.
Walmart's 5-year dividend growth is really not all that good. How important is use of cash to you? I mean, I got them. Well, this is in the pandemic. I mean, that was a crisis. 2019. God, Paul, it's sick how far back I have to go now to get to 2019. Pre-pandemic, they had 17 gazillion free cash flow. It's sort of about the same right now. This is not like Apple. It's not like Microsoft. Compare and contrast Walmart's use of cash with a big tech Mag 7 use of cash.
Yeah, well, it's all part of how we think about portfolio construction. You have a company like a Walmart that's a consistent grower over time, excellent operations and things. And I'm not, just to be clear, I'm not talking about a specific stock here, but just generally speaking, companies like that really add to a portfolio in terms of how they consistently improve what they're doing off of a stable revenue base. And then you have companies that are more disruptive and faster growing. You need both of those parts in a portfolio. Yeah. We think that's especially true today, more so than ever.
Thank you for getting us started. I had no idea Walmart would do this. Rich, what are we up? 7%, 6%? That's a lot of money.
That's a lot of
That's a lot of Walmart.
Yeah.
Big gain.
Bentonville, Arkansas.
Oh, yeah.
That's big.
What's 1,000 miles from Bentonville? I'm working from Missoula.
Exactly.
Robert Teeter, thank you so much. Greatly appreciate it. Can you get out of your seat, please? Michael Barr has to sit down. I mean, it's a cozy type place. For those of you that don't know it, Paul and I work in the absolute nicest radio studio on the planet. Thank you, Mr. Bloomberg and all, Mr. Secunda. This was bought by Terminal Sales. We have fancy glass. We have Lisa Mateo wearing Ulta today. We have a TV monitor board here. Good morning on YouTube. You know, Lisa Shallot's up talking with Lisa Bramowitz, right? It's just spectacular. And we have 4 seats. We decided, I remember this, we had this argument at lunch. Okay, we're over at Michael's. And they're like, we want to do 6 or 7 seats. I go, no, I had a total, meltdown over my avocado salad. And I said, no, we're having 4 seats, cozy,
Keep
tight.
it tight. Keep it tight.
Keep it tight. Barr can squeeze in with our news in New York City. Svelte, Michael Barr.
Thank you very much, Tom, Paul, and Lisa. Vice President Kamala Harris's campaign says she's shifting her focus to the economy with a call for a federal ban on food and grocery price gouging. Harris is expected to lay out her economic platform in North Carolina tomorrow. Meanwhile, former President Trump at a rally in Asheville, North Carolina, touted his economic plan, which includes eliminating taxes on Social Security benefits and tips. And then Trump went off his economy script and slammed Harris.
Everything Kamala Harris touches turns bad. It all turns bad. San Francisco was a great city. Now it's unlivable. California was a great state. Now it's unlivable.
Trump also called Harris crazy. Mediators are set to hold a new round of talks aimed at halting the war in Gaza and securing the release of scores of hostages. The U.S., Qatar, and Egypt are set to meet with an Israeli delegation in Qatar today. Columbia University President Manu Shafiq announced that she will be resigning from her role. It comes months after student protests on campus stemming from the Israeli-Hamas war. Congressional members are reacting. House Speaker Mike Johnson said, in part, her resignation is long overdue and welcomes the news. Finally, we know why Lisa Mateo was smiling like she hit all the Powerball numbers.
Right.
The Yankees beat the Chicago White Sox 10-2, but even more,
please,
it's what New York's Aaron Judge did when he broke out his genuine Louisville slugger bat.
3-0. Judge drives it. Deep left field. Way back and gone. Goodbye. On a 3-0 pitch, Judge lasers home run number 300. The fastest ever to hit that mark.
Just like the man said on WFAN with a call, Judge hit that mark in his 955th game in the 8th inning. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom Paul, Lisa.
You do this. First of all, they're up against the White Sox, so what do you expect? You do this just to aggravate me. Can we talk about Juan Soto? What do they need to do to re-sign him? Folks, for those of you across the nation, I watched Soto with the Padres. It's like the second coming of Wade Boggs with power. Okay, the guy, 4 homers and 4 at-bats.
Yes.
I don't have scope and scale on that yet. We'll get that. Ari's working on that.
And earlier, he hit 3 homers in one game.
What do we have to do to keep him?
Call Steve Cohen up and say, we'll interview.
No. We're going to
we'll
do
interview
something here. I don't know what we're going to do.
Dean Mackey. Soto, the New York Mets, come on. I mean, it has to happen.
Well, see, you guys have the pull. So you all 3 of you guys could just call up the phone and say, listen,
Steve,
we need to keep Soto. That's all you need to say.
All right, Rich, Ariel, make it happen.
Why can't?
Let's give him a table at Rayo's.
Soto.
I mean, get him a table at Rayo's every night. That'd be enough, right?
That's pretty good.
Exactly.
Folks, I can't. 4 homers and 4 at bats.
Yeah.
I'm sorry, that's bigger than Aaron Judge. He'll never get to 512 homers. Just so you know.
I knew you were going to say.
Ted Williams' memory, he'll never get there, I swear. Futures up 5. Wal-Mart on a tear. Retail sales at 8:30. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing. Traders look to more economic data that could reinforce the case for the Fed to start cutting interest rates next month. 8:30 a.m. Wall Street time, we'll get a read on July retail sales, initial jobless claims for last week. We'll also get reports on industrial production, manufacturing, and import prices. So ahead of all that, we have NASDAQ futures up about 0.1%, 31 points. Dow futures up 0.2%, 94 points. S&P futures up 0.1%, or 6 points. We have the 2-year yield at 3.95%. That's little changed. And the yield on the 10-year, 3.84%. And that is little changed. Farm machinery still in demand. Deere reported net income for the third quarter that beat estimates. Its shares up more than 1%. And shares of Ulta Beauty getting a nice lift, up 13%. Filing showed Warren Buffett's Berkshire Hathaway added nearly 700,000 shares in the cosmetics chain during the second quarter. That was worth about $227 million. I know a lot of my paycheck goes there. Yeah. And shares of Nike up nearly 4%. Bill Ackman's Pershing Square Capital disclosed a new stake of about 3 million shares in the company. That is your Bloomberg Business Flash. Tom and Paul.
Rounded up, Walmart up $4 as well. I haven't even had a chance to look at Deere, Deere is one of the CFA level 1.
Yes.
That's sort of the accounting statement because it has the joys of equipment leasing in it.
Oh, my goodness. Who needs that?
I've studied it 5 times,
No
down
idea.
in flames.
Yep.
5 times. Joining us right now, somebody who nailed equipment leasing. Gennady Goldberg joins us with TD Securities on rates. What are rates saying if the equity market is screaming earnings solidity and prices higher? What is a general statement this morning? What is the yield space saying?
It's saying that cuts are coming. Whether it's 25 or 50 or whatever the order is, that's what the rates market's saying. It's basically telling you, if the economy continues on its current path, the Fed is comfortable to cut rates. Now, the biggest question, of course, is it 25 or 50? And I suspect the Fed probably needs a little bit more data on that front. They're not going to commit just yet, but they're probably going to tell us relatively soon.
When the Fed does begin to cut rates, I can't even remember the last time we kind of got into this cycle. How do they do it? Do they do it every meeting, every other meeting? Do they do 25 and then 50, 25? I mean, how does that work, do you think?
Well, usually something's wrong. And you get, intermeeting cuts. You get, relatively rapid rate cuts. I mean, that's why they're saying is, escalator up, elevator down.
Escalator up.
Elevator down on rates.
Oh, okay.
This time around,
I heard that on Industry. He stole that line from the TV show Industry.
Right.
But it's very possible that, you could get a relatively moderated cutting cycle if, as you guys were talking about earlier, growth is still doing just fine and there's not really a massive rush to cut. I think the markets are certainly panicking and hoping for a 50. Main Street, if you look at Main Street and what Main Street needs, it's a start to the cutting cycle, but maybe not necessarily, a massive rush.
I'm going to ask this through the morning. Matt Mishkin with us late, near 10 o'clock when Paul Sweeney does the Bitcoin hour. But Gennady, frame out the real yield right now. I got a 10-year real yield, 1.76%. If we get measured rate cuts, where does that migrate to?
Probably gets closer down to about 50 basis points to 1% over time. Now,
under 1%.
Yeah, under 1%.
I don't believe you. Just full disclosure, you're nuts. But really, under 1, you're the second person to say that.
Yeah, no, I mean, look, as you start to cut rates, as inflation starts to moderate, the real neutral rate for the Fed funds rate is probably going to about 1%. Now, add on top of that the 2% inflation target, you get to 3 nominal. 1% overnight gets you roughly about 1% long term as well, if the market believes that that's where we're going. That's assuming a soft landing as well.
Paul, for people with assets, there's 2 Americas.
Yes,
the haves and the have-nots.
Yep.
For the haves, what Gennady just said is just explosive optimism.
Yep.
It's just got to be.
Yep. So, I don't know. It seems like a lot of folks are saying the Fed is already behind the curve. They should have been cutting rates already, that the economy is slowing. We've got, unemployment of 4.3%, up, almost 100 basis points. What do you say to those folks?
I think the Fed's always fighting the last war.
Okay.
The last time around, they really missed, and this was just back in December of 2023. if you remember, they got really, really dovish right as inflation data just reaccelerated.
Yeah.
They really want to avoid that again. And I think that's why they're being very cautious, very measured. Certainly, I mean, they could serve to go a little bit and ease policy a bit. They don't necessarily need to run. I think certainly if they want to engineer a soft landing, they want to be a little bit ahead of the curve. And, maybe they're a little bit behind right now. I don't think it's the panic mode. The biggest problem for them is how do you communicate to markets that they're actually not behind the curve and, not cause panic with a 50 basis point rate cut to start.
All right. Well, next week, we've got Jackson Hole, Tom, Lisa Bronowitz, Michael McKee. They're going to be anchoring our coverage out there in Jackson Hole next week. Do you expect anything out there?
I expect some discussion. I definitely think they're going to lean one way or the other. What I don't think is going to happen is us going into the September meeting 50% price for a 50 or a 25. I think at one point, before this, the market's going to actually price it one way or the other. I think the Fed's going to help that along as they get more jobless claims data, as they get more payroll data, and that payroll on September 6th is going to be quite important ahead of the meeting.
Yeah, good point.
I think they'll lean one way or the other. What's been interesting to me is that over the last week or so, as markets have calmed down after their kind of spout of volatility, we've seen the pricing for September really start to slip. We were almost priced for a full 50 basis point rate cut, and that's really been slipping, and it's now only about 40% priced.
Well, that's a parlor game. I get that. But for our listeners and viewers, Wal-Mart is an example, up 6%. A select group of people, including Gina Martin Adams, predicted that we would generate profit in America. And that's what we've seen as well. That tells me that fears about bonds, fears about deficits. Joe Stiglitz would say, look at the growth rate, the little g. And it's really not all that bad, even with a very difficult debt and deficit.
Yeah, absolutely. In the short term, things are okay. It's once you look past next year and the year after that, that's when things get a little funny, right? We're talking 6 or 7% of GDP deficits. As far as the eye can see,
oh, I thought
that's
you were talking
not
about
sustainable.
Juan Soto with the Red Sox.
But it's really not sustainable. That's where the worries are going to start to come in. And bond investors are finicky. They don't like to look at just now. They like to look at 10 years, 30 years out. They need to know stability is going to be there for a long time.
For retail, where's the most efficacious maturity or duration right now?
I think the 5-year, to be quite honest.
In the belly.
I think in the belly of the curve, that's where we've seen a lot of buying. That's why the curve is steepened. If you look at something like the 5-year, 30-year curve, that's steepened quite sharply to 10s as well. There is an argument to be made that given all the pricing for Fed rate cuts, the front end may be a little bit overdone.
So if I'm on a New Jersey beach and I'm in my Vespa and I'm having an overpriced latte and I got to decide what to do with my 2-year or my 18-month space, you're saying extend out to a 5-year CD?
I would extend out to 5-year treasuries. Those are a good lock at these levels. If you can do 5-year real rates, that's fantastic as well. As much as we've talked about, yes, you think that 1% is too low. I think they've got more room to decline. I think we've seen probably the highs in real rates for this cycle.
This is brilliant, Gennady. Thank you so much. Well timed, to say the least. Where we are, VIX 16.31. Does the bond market is the MOVE index?
Yes.
Right. Okay.
That's what they tell me. Lisa Bromwich tells me to look at that. I don't know.
She's good on that.
Yeah.
I'm looking at John Deere here.
Yeah.
If I can get it up. Deere jumps after top tractor maker keeps profit outlook. There you go.
It's the farmer. It's a U.S. farmer there, Tom. And the farmer's been under some pressure. Commodity prices have been coming down, and they've had such a strong 3, 4, 5 years, the U.S. farmer. And a lot of analysts have said that's kind of max farming here. We're about to go to a cyclical downturn. But Deere kind of holding in there.
I don't get it. Small ag and turf net sales, that's lawnmowers, I think, down 20%. Construction and forestry down 10%, and yet they're doing great.
Yeah, stock's up
1.6%
6% here. Stock's down 12% year to date. So analysts and investors are a little bit concerned here. But
Deere, here you go. Here's the future. Deere taking steps to cut costs.
Okay, there you go.
That's all there is to it.
Yep.
Walmart and Deere report, much more. Talk about report. Retail sales, including Ulta sales. We'll have that at 8:30. From New York City, we're on YouTube. Subscribe to Bloomberg Podcasts on YouTube. It grows every day. Gennady Goldberg's there. You should be too. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Another inflation report. Well, it did little to change those bets that the Fed's going to start cutting interest rates in September. Now, traders fully pricing in 125 basis point cut by the Fed next month and 100 basis points of reductions through year end. NASDAQ futures up 0.2%, 53 points. We have Dow futures, same, up 0.2%, 117 points. S&P futures up about 12 points. We have the 2-year yield at 3.96%. That's little change. The yield on the 10-year 3.84%, and that is little change. We'll check in with commodities, starting with spot gold higher, $2,460 an ounce. Brent crude $80 a barrel. WTI crude $77 a barrel. Checking in with shares of Wal-Mart again. They are up about 6% right now. Raised sales guidance for the full year. Expects to pull in those shoppers looking for bargains. That also includes wealthier shoppers as well. Shares of Cisco Systems up 5%. It posted bigger than expected quarterly profit, and that was thanks to steady customer demand. But Cisco still planning a new round of layoffs. And after years of pressure from regulators, Apple opening up its iPhone payment chip to third parties. They will charge a fee. Now that move, it's going to allow banks, other services to compete with the Apple Pay platform. Apple shares up about 0.2%. That is your Bloomberg Business Flash. Tom and Paul.
Fractionally, futures lift right now. S&P futures up 0.2%. The VIX 16.28 quiescent. We've moved on from yesterday's drama. Thank you for the international response to our coverage of the Mars transaction with Kellogg's over their snack foods. We wanted to go out across Wall Street to the eat side, not the sell side or the buy side, but people that actually try the product. Joining us now with her full team coverage of Cheez-Its, Amanda Lynam for Blackrock as well. So jalapeno's the way to go.
Jalapeno Cheez-Its, Tom.
I didn't know that was a thing.
You won't regret it.
Okay.
You won't
You
regret
won't
it.
get it?
Yeah.
Now, should I go with the duos where that I split it between a jalapeno and the traditional
I don't have
cheese
a strong
Cheez-Its?
view on that, but you do have to try the jalapeno.
Okay, we will
Cheez-It,
try
yeah.
that at our house. Not for me, but jalapenos is very big. I swear, folks, this is our final discussion of Cheez-Its, other than congratulations to the Mars people, the Mars family, $29 billion transaction, $6 billion of debt. Good luck with that. On the bond market, is it showing a new message off the equity panic of 8 days ago? Is there a new tone to your fixed income space at Blackrock?
So actually, and good morning, thank you for having me. The credit market's resilience was probably the big takeaway over the volatility of the past 2 weeks. You saw markets, the volatility index, the VVIX, certain parts of global equity markets set new post-financial crisis records or even pre-financial crisis records. Actually, credit spreads didn't even come close to their median or the average over the post-financial crisis period. So I would say the takeaway is that credit held in better than other asset classes, all things considered. And actually, we saw better buying on the little bit of widening that we did have. And we've, at this point, retraced, depending on the asset class and the rating, around 50 to 75% of the widening that we saw. I think there's a lot of kind of focus on the resilience of credit spreads and kind of why this is happening. Obviously, lots of well-telegraphed reasons for that in terms of sector shifts and the composition of the index rating shifts. But one of the points I think that's actually not discussed enough is that just companies are staying private for longer in this new cycle. And by the time they actually issue into the public markets, they're larger and more diversified. And so that's why credit, we believe, is holding in better.
How much credit risk do you want to take? I mean, I considered it 2-year Treasury, where I'm happy to hang out at 4% here. Yeah. How much credit risk do I want to take?
We like taking credit risk. I think one of the actual interesting things, and you can see this on the Bloomberg intelligence data actually on the terminal, margins for high yield credit have been improving over the past few quarters, which is a bit of a counterintuitive result.
What does that mean? What is margins for high yield credit?
So margins for your high yield index, you have the LF98 high yield index, LUAC IG index. Actually, in aggregate, the margins for the high yield universe have actually been improving. So in this kind of era of focusing on a higher cost of capital, a slowdown in the economy, you would not expect EBITDA margins.
How many basis points, how many percentage points do you pick up on a high yield Amanda Lynam piece versus full faith and credit or some AAA Microsoft debt?
So the spread, the actual spread on the high yield index is around 338 basis points
3.38
over treasuries.
Yes.
Yes.
3.38%.
But actually, when high yield investors are deploying, they're focusing more on the dollar price and the yield. The yield on the high yield index is around 7.55%. So that's a meaningful cushion in terms of when you're actually deploying capital in this credit market, that you're able to earn a pretty attractive all-in yield. In IG, for comparison, that's around 5%. We've seen significant demand for IG at 5.5% yield, so we're slightly below that given the rate move. But in general, I think so long as you expect trend or ideally above trend growth, and we're actually there, we're at above trend now, that's actually a pretty supportive outcome for credit.
See how she spoke English there? It was great.
For these credit people,
we got her off the jargon.
I don't trust them.
I understand that, I think.
Tom, I think if you're a salesman on Wall Street, a credit salesman, and you got a new issue, is the first company you call Blackrock?
Yeah, it used to be Fidelity, but Larry's been working, so he's called Blackrock.
So you call Blackrock. I mean, what's your interest in new issues? When Wall Street calls you with a new issue, what are the things you look at?
So in general, new issues have been an attractive way to deploy capital because they often come at a discount to the existing debt. We call that a concession. Sometimes those concessions are large. More recently, they've been quite modest, but still, it's an attractive way to deploy capital. The really interesting thing, and we're actually writing about this this week, is that supply in the IG market has outpaced the monthly average every month so far this year, despite the higher rate environment, right? In high yield, it's outpaced most months. So what that tells you is that corporates are not being sidelined by high rates. They're moving forward with what they need to do. The other interesting point, strategic M&A acquisition activity is actually tracking well above the 2022 and 2023 pace, and it's actually only 6% below the 10-year average. So there too, like the news that we've seen recently, corporates are moving forward with strategic plans despite the higher rate environment. But I think the one point on supply that I would make, it does feel like this is a bit of a pull forward towards late in the year. We're running well above what would typically be implied for the summer. So I would expect a slowdown, but we haven't seen it yet.
Okay, fine. But to get to the real world where Mars as a private company takes out jalapeno Cheez-Its, I get that. I mean, forget, Mars has their own way. How do people finance those large transactions? The big money's out there, right?
Yes. So it depends. In aggregate, we've seen cash-only deals represent 52% of the year-to-date volume, which is actually slightly above the longer-term trend. Stock-only deals are actually also above the longer-term trend, so that what's actually narrowed is the mix of cash and equity transactions. It's a little bit misleading to call it cash and debt, though, because for a bondholder, when an acquisition is funded with cash, that can either deplete the excess liquidity on the balance sheet or ultimately it gets replaced with debt. So from the perspective of a bondholder, we care how this is funded.
We're taking CFA level 2.
I'm taking notes over here. I don't know
Everybody in the room is just staring across the Javits Center at Amanda Lynam going, it's not fair. The curve. Amanda, you're going to ruin the curve.
How about private credit? How do you guys think about private credit? I mean, how does that impact your business?
So we actually think about private credit as this third and viable funding option for a wide range of corporates, in addition to the traditional bank lending channel and the public debt markets. That wasn't the case several years ago. That's because private credit has now grown into a sizable and scalable asset class on its own right, so it can compete in areas where it previously could not. We think that kind of ability to coexist peacefully with the public debt markets is here to stay. We expect the mix shift between the two markets to ebb and flow over time, depending on market conditions. Probably the most notable thing that I've seen is that companies with demonstrated access to the public markets, either high yield or loan, are actually choosing in some instances to refi in the private market.
So like a Mars, as Tom was just talking about the Mars transaction, they're going to finance this, they said, with cash on hand and then with new borrowing. So presumably they're going to go to, I think it's JP Morgan and Citi are their bankers on this transaction. They'll see what kind of, I guess, credit terms they get from them. Maybe the public markets as well. They'll hear from their bankers about what they can do in the public markets. Will they also go out and put bids out for private credit, do you think?
So leaving that transaction aside, it is common to see what we call dual track processes, where corporates, CFOs, treasurers evaluate their funding options in both markets, just like anyone would do in terms of, do I issue a high yield bond or a leveraged loan, right? That whole kind of slate of financing opportunities is available. Similar, Tom, to your point on the M&A funding mix, that's a decision that corporates make depending on what is the balance sheet capacity that they have have to add debt at the ratings where they're comfortable, where is their stock price. In aggregate, I would say that funding mix for M&A is tracking in a fairly kind of benign way for bondholders, meaning not skewed super strongly to debt, but it does matter a lot under the surface depending on the sector. And as you can imagine, there are certain kind of cash-rich sectors like tech and pharma that are leaning more heavily on cash and debt.
What will Mag 7 do? I find it, from a Zvi Bodhi at Boston University's standpoint, almost immoral that they haven't popped out to 10 or 12%.
Yeah.
Debt.
Well, in general, in the credit market, as you know, that's a much smaller section of the credit market relative to equities. Net leverage is still really low for that sector in aggregate. So I think it's reasonable to assume that when they're adding debt, they're just moving closer to their leverage target as they build that up over time.
Amanda, thank you so much. Amanda Lynam with us at Blackrock, just a clinic there. This is what I love about surveillance, folks. When we invented the show years ago, get two people back to back with some nuanced differences. Gennady Goldberg, TD Securities, and Amanda Lynam with us from Blackrock as well. She lifts the market. That's what fixed income people do. They lift the equity market. Futures up 13, the VIX 16.25. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Biden administration will talk more later today on its plan to lower prescription drug prices. The talk will unveil more on Medicare negotiations for the price of 10 prescription drugs. Editor-at-large of Public Health for KFF, Dr. Celine Gounder.
KFF polling has consistently shown that giving Medicare the power to negotiate drug prices is popular with a majority of both Democrats and Republicans. And a large majority of people also think that this authority should be extended to private insurance companies beyond just Medicare.
Dr. Gounder spoke to CBS. Columbia University President Manu Shafiq has resigned after a brief, tumultuous tenure. The school was hit this year by student protests from the war in Gaza. Bloomberg Government's Jack Fitzpatrick.
Yeah, it was interesting timing because this issue of the campus protests has quieted down, understandably, over the summer. But it's still something that is a prominent issue, especially for the Republicans who have pushed on this.
Bloomberg's Jack Fitzpatrick. House Speaker Mike Johnson said in part her resignation is long overdue and welcomes the news. Finally, a loving shout out to a great actor, multiple award-winning actor, Gina Rollins has died after a years-long battle with Alzheimer's disease. She rose to fame in movies like A Woman Under the Influence.
Tell me what you want me to be, how you want me to be. I can be that. I can be anything. You tell me, Nikki.
Rollins was also in Gloria and The Notebook, all collaborations with her late husband, director John Cassavetes. Rollins received an honorary Academy Award in 2015 and was twice nominated for an Oscar. Gina Rollins was 94. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Into the weekend, we need to move to something healthier than Cheez-Its. I got blood. It was like when I got home yesterday, it was difficult.
Okay.
So we got to move on from Cheez-Its. Let's go to something healthier. How about hot dogs?
Oh, perfect.
Scarlet Fu briefing me on this. Mamaroneck, New York.
Yep.
It's very cool. 105 years old.
Really?
Walter's Hot Dogs.
Wow.
The Warrington family. Same location. Same hot dogs. They split them. Special sauce. I don't know. Scarlet Fu's encyclopedic.
Yep.
Eric Weiner of Bloomberg News is our expert on this. And it's just the coolest thing. A family getting it done for 105 years.
Amazing. I mean, the single, which is our world-famous hot dog on a bun, $3.20.
I know. It's on the edge of Costco.
I mean, that's a deal. That's a deal. I mean,
Well, wait,
and then
you split the hot dog?
No, you slice it. It's a split hot dog.
sorry.
Yeah,
you know, it's
I'm
like,
sorry.
you can get the double. That's two singles on one bun, $5.75. Nice.
And what to me is cool is how many kids have they employed
Yes.
over 105 years?
Yeah, exactly.
I worked once at a hot dog stand. About an hour after they said, Mr. Keene, thank you, that's fine. You can go, the paycheck, we'll send it out.
Oh, the chili dog. That looks good. $4.85.
It is.
Oh, I'm getting too hungry now.
Walter's Hot Dogs from Marinette. Congratulations, an American institution. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing after figures out yesterday showed U.S. year-on-year core consumer prices in July rose at the slowest pace since 2021. Right now, we have NASDAQ futures up 0.3%, 57 points. Dow futures up 0.3%, 128 points. S&P futures up about 13 points. We have the two-year yield at 3.95%, little change. The yield on the 10-year 3.84%. And that is little changed. We have spot gold higher, $2,462 an ounce. Brent crude, $80 a barrel. WTI crude, $77 a barrel. Shares of Boeing up about 0.5%. Some good news for the company. Israel's El Al Airlines. It's placed an order for about 20 of the company's 737 MAX jets with an option for 11 more. Now, that deal should be worth between $1.5 and $2.5 billion. Shares of Alaska Air, they're lower, down 2%. Its flight attendants rejected a labor contract. And Tom talked about this. Starbucks new CEO Brian Niccol, well, he's not relocating to Seattle when he joins the company next month. Filing shows he's going to still live in Newport Beach, California, the home of his current employer, Chipotle. He did, though, agree to travel as needed to do the job. That is your Bloomberg Business Flash, Tom and Paul.
I'm sure. I can see Dr. El-Arian at the Starbucks. Can you see Mohammed El-Arian in line at the Starbucks in Newport Beach?
Sure.
You know.
Yeah,
think he gets like a scone?
I don't know if he's a scone guy, babe.
He's probably black coffee like me.
Boy, Manhattan Beach, how good is that?
Yeah.
That's a whole Pimco thing. I'm not buying it.
The egg white bites. There you go.
Egg white bites? Jeez.
Starbucks egg white bites. I get it every time.
Folks, I learn stuff every day on this show.
Poor Mr. Mateo.
The entertainment sucks. How did the entertainment bigwigs deal with looking at the Mars Kellogg's transaction? They did the thing, I'm sure, over 4 phone calls. A lot of bankers weren't involved. I believe it was done quickly and all that. But what are they waiting for? I just don't get it.
No, I think there's some regulatory issues here because you can't put a lot of these networks together from a regulatory perspective. But the FCC needs to kind of get with it.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Daily look at the front pages. A Lisa Mateo Hour brought to you by Ulta and Interactive Brokers. Their portfolio analysts consolidate and analyze all your financial accounts on one powerful dashboard. You do it for free. Sign up for Portfolio Analyst at ibkr.com/free. PA. What do you have?
All right, so we just talked about, Starbucks' new CEO not working in, Seattle. Google's ex-CEO, he's talking about the work from home. He's actually blaming it in the company's losing battle in the AI race. So he's saying, Eric Schmidt, he's also the former executive chairman, he said this during a talk at Stanford University. He was responding to a question about Google competing with OpenAI, and he said, Google deciding that work-life balance and going home early, working from home was more important than winning. So that was a shot right there. He also said startup work is important because people work like heck to get those startups going.
That wasn't the correct quote there.
Home. Yeah,
you gave the PG version.
I did give it before.
Yeah. No, but you're right. Lisa. The startups. He's right on that. You talk to folks that work in the startup business. Yeah, that's their entire life. It consumes them day and night, and they're just because it's make or break. You either make it or you go bust, and so they work like crazy.
To close a loop on this, to the Wall Street Journal yesterday, Mr. Schmidt said, quote, I misspoke about Google and their work hours, Schmidt said Wednesday in an email, quote, I regret my error. Wow, the pushback must have been something.
Yep. But he joins a long list of corporate leaders, including J.P. Morgan Chase CEO Jamie Dimon and Tesla CEO Elon Musk, who have complained about work-from-home policies, saying they make companies less efficient and less competitive.
What he needs to do out Stanford, Palo Alto, go see Professor Booth. Yeah. Nicholas Booth has really led on this and actually studying the issue. And a lot of tycoons like Eric Schmidt will say, I really don't care or I don't believe. But the answer is, at the minimum, it's a raging debate, Lisa. I see it in the streets of New York. I mean, I'm thunderstruck at Lexington and Park Avenue. I mean, I know there's a summer slowdown. I get it.
Right.
Sure, but it was
It's
bustling.
more now with work from home. Next, what do you
got? This new study shows Gen Z voters don't want social media restrictions. Shocker here.
What does that mean?
Gen Z voters, they don't, because there's all these talk about regulators trying to cut back and get some tough regulations on these social media apps to protect kids. But these kids, Gen Z, you know them, 12 to 27, they're saying they don't want the restrictions. There was a study out, more than 60% new voters oppose requiring kids under 16 to ask for their parents' permission to use social media. The reason why this is important, though, is because Gen Zers, more of them are getting closer to that voting age, so they're starting to have a say in this, and there's such a huge proponent of social media. I mean, most of the Gen Z is the most active people on social media.
Isn't the biggest debate here on August 15th or whatever it is, this whole idea, a lot of schools now are saying leave your cell phone at the door?
Yeah.
To me, this is a lot bigger deal.
Yeah, exactly.
You know?
I mean, I think that's a lot of schools in a lot of states, but actually not a lot of states. I think there's about 8 or 9 states that have had some legislation saying, you got to put your phone here in a secure place.
Right.
You're not taking it into the classroom.
Right, like my
we do
daughter's
that in our
supposed to.
house
Yeah.
for
dinner.
Yeah.
Yes, we do that too. No cell phones
we
at
line
the
up
table.
the phones.
The Mateo household is strict.
It is.
She runs a strict.
Vetville, all of them. Mrs. Keene, my phone, all of them get lined up.
Okay, good.
And then we all dash for them.
And afterwards.
No, I don't want dessert.
You go for the phone. No, but it's true. A lot of them, like even my daughter's school, you got to keep it in the backpack. But they get these notifications too. Like the kids turn on notifications for social media, so their phone's constantly dinging. When they get like some kind of post or someone responds to them. So it's that distraction. Okay, we've been talking about, grocery stores, a growing grocery bill. Well, grocery stores are now getting selective about their shelf space. We talked about them leaving more space for the store brands because people are switching to the store brands because they're cheaper.
I've done that.
See, you've done it. I've done it too. So you see the grocery aisle starting to change. Now these major food companies, they're fighting for the shelf space. That they once had that major part of it, and now they're fighting for it for the store brands who are getting, some more greater competition there. They're trying new things. They're trying new products. They're trying to work to ensure their packaging prices appeal to shoppers. But the thing is shoppers just want to spend less.
Yesterday, I learned a new term that I had not heard before. It's called inner store. Jen Bartashes, who covers supermarkets, grocery stores for Bloomberg Intelligence, she just threw out this term, inner store. And I'm like, what's inner store? Yeah. That's the stuff that's like in the core of the supermarket, and that's like the basics, soups and things like that. Okay. The outer rim of the store, the edges of the aisles, the ends of the aisles are the higher margin stuff. And where they tend to have maybe some promotions and things like that. Whereas the basics, the stuff you just have to get every time that you don't need to promote, you don't need to do anything, that's in there. I don't get it.
I'm in the camp that everybody's buying the same 37 products. Try to get a quart or a half gallon of 1% milk. Good luck with that. All sold out. Butter, gone. Everybody wants the same.
It's
an Irish butter. It's Guinness.
There you go. Guinness of butter.
Next. You got one more?
Yes, your favorite topic, breakdancing in the Olympics.
Oh geez, you're killing me.
So there's actually some controversy around it now because there's a breaker from Australia. Her name is Rachel Gunn, her AKA Ray Gunn. She's from Sydney. She's a Sydney University professor. She did this dance. It was called like the kangaroo dance. She did some other weird moves, but she scored 0 points. And the thing is a lot of people are making zero. So a lot of people making fun of her. They went to the late night talk shows, but there's actually an online petition that's criticizing her. So now you have the Australian Olympic Committee getting in the middle and saying, hey, leave this one alone. Like she, we represent, we're behind her. They support her.
Right.
But the question is, will it come back to the Olympics?
How do these things become Olympic sports? How does something get approved to be an Olympic sport?
A lot of politics.
I guess.
I
don't know. Did Rich Truman agree to say breakdancing?
Yeah. I don't get how you have breakdancing, but you don't have like softball or baseball.
Yes, good point.
Could you imagine Lisa's hair in glam rock?
Yes,
Ooh.
totally.
Like Lisa's out on Long Island. Joan Jett's playing. It's Thursday night. She's got the 5-inch platform, the Kiss shoes on, the glam rock hair. We did boy bands yesterday. Oh, the emails were so kind. Joan.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Right to it at the 8 o'clock hour. Retail sales in 29 minutes.
Yeah.
Really looking forward to that. The revisions are supposed to be critical. It's a very complex report. We'll have a lot of the explanation of that after 8:30 with Michael McKee and others sending us emails explaining it in English. Retail sales on America. Many people saying it's actually a bigger deal than CPI yesterday.
Okay. Yep.
We will see. We're going to get right to it this morning. Gina Martin Adams is here. And Paul, we got to do that. With the VIX of 16.28. I remember Monday, I was home on sabbatical.
Yep.
And
you're to blame. You're to blame for that whole
You're talking
debacle.
to Gina on the bat phone.
Yep.
And she's saying, shut up, don't go to cash, just stay with it.
Exactly.
So we're going to have Gina with us here
Perfect.
in a moment here with futures up at 13. Deere, Wal-Mart, and the rest is better than good. We'll look forward into 2025. We're on YouTube. Subscribe to Bloomberg Podcast. Android Auto, Apple CarPlay. Do you know that an Apple CarPlay, thank you, a gentleman out on Twitter had this. They tell you who the guest is before they come on.
I know. It's right there on the screen.
They know. Apple
It's
CarPlay
unbelievable.
knows it even before I know it.
Yeah, it's
I don't know how
Apple
they
people
do
are.
that.
I don't know what's going on there. They're
It's
good.
like high
They
tech.
are very good.
It's high technology from the Interactive Broker Studios. Our Bloomberg Business Flash, Lisa Mateo.
Yes, and futures pointing to this positive open on Wall Street. The S&P 500 extended its winning streak to a fifth day. That was thanks to that mild CPI print. Right now, NASDAQ futures up 0.2%, 49 points. Dow futures up 0.3%, 134 points. S&P futures up about 12 points. We have the 2-year yield at 3.95%, little change. The yield on the 10-year 3.84%, and that is little change. Some positive Asian data also helping. Japan's economy grew faster than expected in the second quarter. China's retail sales also beat. So overseas, taking a look, we have the Nikkei up 0.7%. Over to currencies, we have the Japanese yen 147.23 against the dollar. To earnings we go. Wal-Mart now up 6%, raised its sales guidance for the full year, also raised its targets for operating income and profits. Then we go to higher end retail. Tapestry, owner of brands like Coach and Kate
Now we're
Spade.
talking.
Yes. Quarterly profit beat estimates. The company also said, though, it's staying with its commitment to buying rival handbag and apparel retailer Capri Holdings. Their shares up about 5% right now. And farm machinery, yes, still in demand. Deere reported net income for the third quarter that beat estimates. Shares up more than 2%. That is your Bloomberg Business Flash. Tom and Paul.
On a Thursday, into the Friday, into the weekend, when you're going to sit this weekend with a beverage of your choice in your hand and go, what do we do about our view into next year in the stock market? This is the most important conversation to get out 5 days. Gina Martin Adams is with us. She has absolutely nailed the earnings and revenue solidity of American companies driving equities at Bloomberg Intelligence each and every day. Can you extend your earnings optimism into 2025?
Depends on how far into 25 you want me to extend it.
January
into the first
5th.
half. I do think we're going to have very solid earnings into the first half of 2025. And there's nothing that has come out of this earnings sort of reporting season to kind of deny that we are still in an uptrend, an improvement off of 2022, 2023 lows in the earnings cycle. The problem that we're running into right now, and this has really been the case for more than 2 years, is the earnings cycle is very independent of economic views. And this especially became very clear over the last week when you talked about last Monday. Coming into last Monday, the sentiment surrounding the economy was incredibly negative. You had not only economic data that disappointed right before that manic Monday, but you had a lot of yen movement related to what's happening at the Bank of Japan and the Fed, and that created an intense amount of volatility. But beneath all of that noise, you still had tremendous improvement in the earnings cycle emerging. I mean, coming into this earnings season, analysts were expecting 8% growth. Many people were saying, no way, can we get 8% growth because the economy is still so weak? But in reality, we're getting 13% growth. We're probably going to see 14%. by the end of the season. So very, very strong growth is emerging, and it's emerging in sectors that many analysts were incredibly bearish on, way too pessimistic on. So I do think that you have this tailwind of earnings that is very independent of the economic data, and you have to cut through that economic noise.
Where's the earnings growth coming from? Is it from top line growth? Is it from margin improvement?
Yeah.
Where are we seeing it?
It's a combination of both. Top line is still sort of stagnant. Right now we've got sales tracking about 5.7% growth. That's still a little better than expected, which was 4.6% growth. But it's about 5.7% growth. Margins are still beating expectations. In particular, net income margins are beating expectations across the board. And that's where a lot of the growth is coming from. Many people are very concerned about the consumer. Oh, is the consumer going to topple earnings? The truth of the matter is, within the S&P 500, the U.S. consumer is not the predominant driver of earnings. And that's so important to consider. Let's look at Walmart's numbers today.
Yeah.
Walmart's doing fantastically. Walmart is one of the biggest consumer companies. Just because consumers are cutting back on some discretionary spending does not necessarily mean that S&P 500 earnings are at risk in totality. And this is just important to consider, is we oftentimes do far too much sort of mental attribution of economic data and what it means for earnings, and we create a lot of
financial media does that?
Yeah,
I'm
well,
shocked.
we as in the investor class as well.
How about AI? It's been such a theme for this market for the past, almost couple of years here. Do we see it in the numbers anywhere in earnings for these companies?
So it is showing up now as a little bit of a margin suppressant. And that's because companies are spending more than anticipated on AI. In particular, in the tech and communications space, we started to see a little bit of margin, I wouldn't say margin weakness, but margins that were no longer topping expectations emerge in the third quarter because companies are having to spend on this. We're still seeing very little net improvement in margins outside of the tech space related to AI. These companies still have to even get on the spending bandwagon for AI implementation. So we're still in the very early stages. But right now we're seeing companies have to spend a little bit more than they were anticipating because they're just jumping on board.
On a sector or individual stock basis, do I want to be more diversified off belief or less diversified, more focused off belief?
I think you need to be more diversified off belief because the belief is, as we're moving into 2025, we'll see more distribution of earnings growth. We've been in this incredibly concentrated earnings environment over the course of the last 6 quarters or so. That earnings growth is increasingly dispersing to other sectors, which suggests that you want to be slightly more diversified and less concentrated in your portfolio bets. Now, that's going to be tough for the investors to adopt too, because generally we've seen excessive positioning in just the biggest of the big cap, most profitable names, the names that have performed the best in terms of earnings.
Well,
and this is a lot of what's happened so far in this third quarter. We are seeing that dispersion start to emerge.
Somebody will say Apple is under-owned institutionally. Does that mean some stock that Paul and I don't know the name of is over-owned? There's got to be something else.
I think
what's
the
over-owned?
only reason that people are saying that is because the market cap share of Apple is so enormous. It's very owned, right? But are people betting on Apple to the degree that the S&P 500 is betting on Apple creates that statement of under ownership. What you find is incredible concentrations clearly in NVIDIA, but broadly these stocks make up so much of the S&P 500 that it's very difficult for any kind of benchmark portfolio manager to get too over-owned in any of them, but they are still concentrated in those stocks.
I love asking you this question every time you come in. What's screening well for you and your team these days?
Yeah. So we talk a lot about financials. Financials had a phenomenal earnings season. There's just an institutional bias against financials because of the fear of the commercial real estate meltdown. Yet the sector over positioned for a meltdown to emerge, and they've been sitting waiting for this meltdown to emerge. They're very well prepared for delinquencies rising.
You know, blue button. The Detroit Lions blue button. One final question. There was all this gloom 8 days ago. I'm looking at the drawdown on Apple, and it's comedic. It's like half of 1%. Does Mag 7 just break through to new highs?
We really like low volatility stocks at this point in time in particular. It's not necessarily Mag 7 alone, but it's low volatility, high profitability as a generalized theme. This is part of our MVP strategy.
Here we go.
Yeah, there you go. Stick with low vol and high profitability as an overall strategy because those stocks, the Mag 7, led so much of the gains in 2023, 2024, you've got to see greater distribution of earnings growth start to move toward greater distribution of price
all
return.
I know, 18 months ago, you absolutely nailed it with your belief in earnings solidity and profit of American companies. Futures up 12, Dow futures up 137. Gina Martin Adams, thank you so much. The VIX, 2 cups of coffee ago, 2 cups of Sanka, was 19.
Yep.
And big news,
look at that.
below 20.
Yep.
16.27. I don't know where we're heading by the end of the weekend. Back under 15. I can't believe I'm saying that. We'll have to see as well this morning. On that 4% 2-year yield, 3.95%. You heard Gennady Goldberg of TD, Toronto Dominion Bank, saying he likes the 5-year maturity for those looking for yield. That's his opinion, not mine. The 10-year yield, 3.84%. The real yield, 1.76%. Again, the VIX, 16.27. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden will return to the campaign trail to hype Vice President Kamala Harris for the White House. They will take the stage together today for the first time since Biden ended his re-election bid and endorsed Harris. They will tout prescription drug savings under the president's signature Inflation Reduction Act. It will unveil more on Medicare negotiations for the price of 10 prescription drugs. Editor-at-large of Public Health for KFF, Dr. Celine Gounder.
For many seniors, being able to afford the out-of-pocket costs of medications can be a real financial burden. And the hope here is that by being able to negotiate directly with the drug companies to reduce the prices that Medicare has to pay for certain medications, those savings will also be passed down to Medicare beneficiaries and taxpayers as a whole.
Dr. Celine Gounder spoke to CBS. Tomorrow, Vice President Harris's campaign says she is shifting her focus to the economy. At a stop in North Carolina, Harris will call for a federal ban on food and grocery price gouging. Meanwhile, Donald Trump is downplaying the significance of the economy as he shifts campaign strategy. Bloomberg's Ed Baxter has the story.
Trump has traditionally had an advantage when it comes to the economy as an election issue, but campaigning in North Carolina talking about his aides, he said they wanted to do a speech on the economy. They say it's the most important subject. I'm not so sure it is. Then he went on to say inflation is the most important, but then added that's part of the economy. He also seemed to change his mind on the Affordable Care Act.
She goes around saying, well, he's going to get rid of the health. No, I'm going to keep it unless we can come up with something that's better for you and less expensive for you. Otherwise, we're not doing it.
Congressional Republicans have tried to repeal it. Ed Baxter, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
We're doing the hot dogs today. Good morning to Walter's Hot Dogs from Mamaroneck. R.W. Apple years ago, New York Times said best hot dog stand in the country. Michael Barr, total tantrum. I got an email from him, folks. It's almost an HR issue. Detroit's Coney dogs.
Lafayette, Coney Island. Oh, my goodness gracious. You have to try it.
With beef heart chili on top? Discuss.
Well, doggins. let's just say it's one of the tastiest hot dogs I have ever had in my life. The flavor involved in that, second.
It's on the edge of Nick Toes in Rochester. I mean, it's a natural casing hot dog, Paul.
Yep.
None of this East Coast stuff. It's like a real hot dog.
Yeah, exactly. Bring it.
Equal time. Good morning, Detroit, and your Coney Island dogs. Good morning, Walter's Dogs. Mamaroneck. Futures up 13. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures in the green. Traders looking to more economic data could reinforce the case for the Fed to start cutting interest rates next month. About 15 minutes from now, we'll get a read on July retail sales and initial jobless claims for last week. Now, the Fed's Austin Goolsbee tells Bloomberg he's growing more concerned about the labor market than inflation. Right now, NASDAQ futures up 0.2%, 49 points. Dow futures up 0.3%, 141 points. S&P futures up 0.2% or 13 points. We have the 2-year yield at 3.95%. That's little change. The yield on the 10-year 3.84%, and that is little changed. Shares of Ulta Beauty getting a nice lift, up about 11%. Warren Buffett's Berkshire Hathaway added about 700,000 shares in the company during the second quarter. And then Bill Ackman's Pershing Square Capital, well, they were busy too. They took a new stake of about 3 million shares in Nike. Shares of Nike up about 4%. And Chinese e-commerce retailer Alibaba, their ADRs down 4%. First quarter revenue weaker than expected. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Surveillance correction right now, very important. I assume Joan Jett was a Mets fan. Wrong. Oh, man.
Really?
Time out. She's a massive Orioles fan.
I didn't know that. Okay.
That's why we played her. She's an Orioles fan.
Okay.
It's good to have David Rubenstein in
Yep.
the other day. Michael Bloomberg is the principal, the founder of all that we do at Bloomberg, including what we do on Bloomberg Radio and YouTube, Apple CarPlay, Android Auto. And within his philanthropy, I have studied carefully his huge success in his team in coal, in the OECD, coal in America, about just simply making the air cleaner. I am one of the generation who remembers Los Angeles in a bath of smog, and one day there was the St. Gabriel Mountains were there. No one in journalism has covered coal like Javier Blas, and joins us now off his late July column, which he redux today on video. Javier, it's just real simple. The line for OECD shows all the improvement of stepping away from coal in China and indeed India, but particularly China's on another planet. Discuss.
Well, you summarized the problem very, very well. The line from the rich countries, the OECD countries, has come down significantly over the last 20 years. In some European countries, coal has completely disappeared now, particularly here where I'm sitting in London. The UK will shut down in a few weeks his last coal-fired generation, electricity generation plant. But the story is very different in China. It's very different in India. To the tune that about 70% of the world's coal today is burned in those two countries. And it's signs of plateauing perhaps in China, but every data point shows that massive increase ahead for India. So we are going to still be with coal for many, many years around.
Do they have coal, even with what Liz Economy and the others would say is the federal Chinese in Beijing? They want to get rid of coal. I get it. But do they have coal because they can't do an alternative?
They have coal for two reasons. One is dependable. It's not dependent on the weather. You could generate coal whenever you want. You don't need to wait for the sun to be shining or the wind to be blowing. And they need coal because their electricity consumption keeps increasing quite significantly. And also they like to burn coal because it's a home produced commodity. They don't need to import as much. They import a fraction of the coal that they are burning, but a lot of the coal that is being used in China and India is mined domestically, and that is seen as a sign of energy security and just overall of national security.
And I'm just reading your article here, your opinion piece here, Javier. And even as we start to increase the production of clean energy, a lot of the clean energy is produced using dirty energy. I mean, how do you deal with that?
Well, it's one of the ironies of the energy transition that you need a number of critical resources to transition, but those critical resources today are being produced mostly on coal. Nickel, which is a component of electric cars batteries, is paradigmatic of this situation. A lot of the nickel is produced and refined, transformed from ore into metal in Indonesia, and their coal consumption has doubled over the last 5 years because that industry is significantly fueled by coal-fired power plants and coal furnaces. So it's a problem. It's also the case that we are beginning to realize that the electrification of everything means more electricity consumption. And in some countries, that electricity consumption in part is going to be coming from coal.
Paul's going to ask the smart questions. Javier, I'm going to ask the dumb question of the morning. Does coal fumes, dust in the air, does it come across the Pacific Ocean to America?
Some of it, yes, but mostly it's just contributing to the global warming. I mean, it doesn't matter where the coal is burned. We are all going to be affected because that's going to increase the levels of CO2 in the atmosphere, and that's going to mean that in that way, the concentration of CO2 in the atmosphere increases. It doesn't matter whether that coal is burned in Beijing. You are going to suffer the consequences in New York City.
Paul, in the zeitgeist, they had Antarctica, which is, I guess, in their winter right now.
Okay.
Except they're having the warmest winter ever.
Are they? Okay.
And they showed a picture from the 1920, 1930s, and a picture now, shocking. It was just amazing how different it was.
Yeah, exactly. Hey, Javier, in your piece here, you recall your father, aged 73 right now, recalls hauling coal as a kid from the local warehouse to your grandparents' home in northern Spain. So for a lot of folks, coal is very real. And in China, I'm looking at your piece here, 56% of the coal that's consumed is in China. What is the policy of China towards coal?
The policy at the moment is to continue to rely on coal, try to build as much as renewable energy as they can, particularly solar and wind, to use that to meet the growing demand for electricity. But there is not a policy to get rid of coal right now. It's a policy perhaps to slow down the deployment of coal, but China is still today building more coal-fired power stations at home. So the policy of China is coal is needed for energy security there.
Of course, with Javier Blas on, we've got to talk about Spanish olive oil. It's a crisis here with EU subsidies, EU prices still shockingly high. When does olive oil become reasonable, Javier?
Well, the price on the wholesale market has come down around 25% from the all-time high that we have at the beginning of the year. I seem to remember it was January or February where we reached the record high around $9,000. We are just under $7,000. The crop in Spain, which will be harvest starting on late October, but particularly around December, January is when the big harvest of the olive is looking very good. It's not double the last previous 2 years, but it's up more than 50%. The rains have been good. So I'm starting to look, and I'm getting a bit antsy that the price of my supermarket has not yet dropped nearly as much as the wholesale market. So I'm keeping at that, and I give it a few weeks. I may start naming names, but so some supermarket in West London is going to get in trouble. But just generally, I will expect that by Christmas time we will be enjoying much lower olive oil prices. Thank God.
I got 20 seconds left. Somebody in Istanbul just emailed me. Is there a difference between Spanish and Turkish olive oil?
Oh boy.
Both are excellent olive oils. I will have a soft spot for the Spanish one.
Javier Blas, thank you so much. Surveillance olive oil reporter. And seriously, world-class work on coal in the OECD.
And Tom, there is
China,
olive oil
India.
extra virgin EXM spot. There's an index
I look
for
at
that.
it every morning.
I know. Who doesn't?
It's gotten
And he's right.
outrageous.
It's crazy. But it is down 25% from the peak, as Javier mentioned.
To Javier's credit, may I state that the Spanish olive oil that he forces me to buy
I do.
is sold out.
Is it?
It's where I shop. It's sold out.
I did
It's
switch
like
from Italian to Spanish just because of Javier.
Just because of Javier.
Yeah,
He
sure.
and I, the finance minister of Spain sent me a
thanks.
lovely handwritten note and said, "Thank you for listening to
Yep.
Javier." It's great. For those of you not on YouTube,
didn't know.
Ari's got the great photos and vignettes of olive oil.
Yeah.
Javier Blas here with olive oil down, but still he's worried. Also on coal. Thank you so much. What do we have? Retail sales in 4 minutes. A critical report. Futures up 14. Stay with us for economics from New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are just moments away from initial jobless claims for last week, but also retail sales. We already had this look kind of into the state of the consumer with earnings from Walmart, which said it expects to continue to pull in shoppers looking for bargains. Now, that includes wealthier shoppers. Walmart shares up 7%. It also raised its sales guidance for the full year. So the numbers are starting to come in. Tom, you want to start with retail sales, initial jobless claims? Where do you want to go?
I'm going to start with Juan Soto's statistics. Okay, on retail sales right now, we're coming in up, up, up. There's no other way to put it. Again, these are nominal numbers. Futures explode. Futures were up 10.
Yep.
They're now up 30, up 0.5%. NASDAQ futures up 0.6%. I'm going to do a couple here, and Paul's going to give you the details. There are 20 lines of economic data to get you out to 10 a.m. This morning. First of all, the Philadelphia Fed Business Outlook is a huge negative 7%. That's the only negative I can give you. Claims are quiescent. There's no other way to put it. The control group on retail sales, which is you take out Ulta makeup, you take out building materials and something else.
Yeah, I don't know.
Retail sales control group was 0.1. It came in more optimistically, 0.3. Paul?
Yeah, so the headline, Tom, on retail sales up 1%. The consensus was 0.4%. Last period, 0%. The revisions coming in a little bit mixed here for the last month. And let me initial jobless claims for Rich. He's a big initial jobless claims fan. 227,000. Consensus was 235,000. So, a little bit better there.
Yeah, so retail sales move the market. There's no other way to put it. Up 10, now up 29 on futures. The VIX explodes lower, 16.2-ish, 15.87 on the VIX. In the yield space, higher yields, more buoyant economy is the signal, 4.04% in the 2-year. The 10-year yield, 3.90%. Oil up fractionally, $81 on Brent crude. Gold up $20, right at $2,500 per ounce. Dollar with a little bit of fractional strength. I won't give you the cross rates, not that important. Of course, with the economic indicators, these 20 lines of data we've got on the Bloomberg terminal through the morning, our foundation is Commonwealth. Thank you so much, Commonwealth. And the economic indicators, they are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. We're going to dive into the economic data right now. We've given Tiffany Wilding over at Pimco, Newport Beach, California, time to do it. But Tiffany, I got to rip up the script right now. The new CEO at Starbucks is going to stay in Newport Beach instead of commute to Seattle.
Smart person.
I mean, Tiffany, what is the attraction, the allure of Newport Beach versus him and the fam moving up to Seattle?
Well, I think it's your favorite restaurant, Malarkey's, by Fashion Island. But to be fair, the beaches here are very gorgeous. It's like living in a resort community. It's very different than New York City. It's a very nice place to live for sure. I'm not surprised.
You're killing me. Let's migrate to retail sales right now. It's just such a tough life for Tiffany. Wow. I got a nominal number here.
Malarkey's Irish.
And what's really important, Tiffany, is I got some revisions that are actually pretty quiescent. This is a constructive set of data, isn't it?
Yeah, I mean, I think the bottom line is, just looking through this, is this completely confirms that the U.S. was not in recession in July. And obviously the risks of that, or at least the market's focus on the risks of that, were increased because of the unemployment report, and specifically the increase in the unemployment rate, which has triggered the so-called SOM rule. Historically, the SOM rule has been a good indicator that we are in recession right now. But as we've been discussing, there's good reasons to believe why this time is actually different with that rule. We've had pretty big supply side gains in the labor market met over the last few years as a result of immigration and just folks coming back post-pandemic. And that's not the markings of an economy that's in recession. This retail sales report just completely confirmed that.
So on the retail sales, Tiffany, again, I'm going to look at the control group. I'm not sure what's all excluded, but let's go with it. The control group, positive 0.3%. The consensus was 0.1%. What do you make of the U.S. consumer these days?
Yeah, I mean, I think overall the consumer is still strong. I do think that you have seen some deceleration in consumption, but that's okay. We were living in an economy where you had a lot of above trend growth. Some of that was due to immigration, but some of that was due to just the fact that we had a lot of stimulus post-pandemic. As that is wearing off, you're seeing things just normalize. So I would argue it's just a healthier environment for consumers. You're seeing them more picky, with pricing. Obviously, we had the Amazon Prime Day and related promotions that probably boosted nominal retail sales in July. But overall, I would say that we're getting back to normal for the consumer.
Okay, my problem is, Tiffany, and it was the number one fight I had with the wonderful Alan Meltzer at Carnegie Mellon. The average Newport Beach, California home price is $3.393 million. That's the average price off Zillow for the Tiffany Wild hood, $3.93 million. Tiffany, that's not America. How much of the buoyancy in retail sales is coming from 10% of the public?
Yeah, no, you're absolutely right on the distribution of outcomes given wealth level, and we very clearly see that in the data. So when we look at the retail sales number, that's the average consumer, and that hides a lot of differentiation under the surface. And you're absolutely right. What we're seeing is that lower income consumers, they are struggling. We are seeing more delinquencies on credit cards, on auto loans, and things like that. But overall, the consumer is doing quite well. The consumer, in terms of its balance sheet, we came out of this recession, the pandemic-related recession, with actually consumer balance sheets being stronger than where they were when we came in. That's something that never happens in a recession. Consumers are also enjoying a lot of wealth that's been created in the largest asset that they have, their homes, as a result of home prices increasing. And a lot of them also have low mortgage rates still. So, I would say, yes, there is some differences, by income level, but overall, the consumer is doing quite well.
All right, the consumer's doing quite well in general. We've got, I guess, inflation coming down, moderating as we continue to see that in both the PPI and the CPI data. So what does that set up the Fed to do in September, do you believe, Tiffany?
Yeah, I mean, I think when you have an economy that's getting back to normal, you need to have monetary policy that's also getting back to normal. And I think Fed officials would argue that they think policies in restrictive territory. We would agree with them. We do think higher interest rates are restricting the economy to some degree, and just bringing that back to normal also makes sense. And we think that's what they're going to start to do in September. And they're probably going to do that. They could do it at varying degrees. The market's obviously pricing in some chance they cut rates by 50 basis points.
Right.
We think 25 is more likely just because the economy is not going into recession. So they can kind of do this in a measured, paced way and get the economy back to normal.
And Tiffany, if you're sitting with the animals like Jerome Schneider, and they're just snarling and they're angry. It's miserable out there at Pimco. Tiffany, you're talking to Jerome Schneider, and he goes, what's your GDP call? Quickly here, what's your real GDP call up 12 months?
Yeah, I mean, so we're still looking for an economy that's doing quite well. Maybe not as well as last year when it clocked 3% growth, but our forecast for this year is around 2%, and a little bit below that, in 2025.
Okay, so it's grim, 2.2%. What portion of America is living Lawrence Summers stagflation beneath 2%, or even feeling a recession when you're aggregating a 2.x% real GDP?
Well, I think that, the thing to remember is that, looking back at the labor market statistics, the unemployment rate has been going up, not because people have been losing jobs. On aggregate, we've actually had job growth over the time period that we've seen the unemployment rate rise. So you're seeing people that are coming back to the labor market, and folks that have entered the country entering the labor market, and the folks that have jobs are keeping them. So that's not really the markings of an economy that is stressed.
Tiffany, thank you. This was the interview of the day. From Newport Beach, California, she's 1,000 miles from where she wants to be. Tiffany Wilding of Pimco. Greatly appreciated today in retail sales. Cut a little short there. We got to do a data check, Paul.
Yep.
To review, futures up 10, then futures up 30, now futures up 44, up 0.8%. NASDAQ futures up 176, up 0.9%. Here are the levels. Wow. 5,000. My eyes are, Lisa, my eyes are failing me. Go to, give me some glasses.
5,520, yeah.
Thank you, nailed that. 5,520. I couldn't reach my walker. The Dow, 40,400. NASDAQ, 19,200. Can I just say that the response on YouTube live chat to Lafayette's on Coney Island in Detroit, record-setting. We'll get to that. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Mediators have started a new round of talks aimed at halting the war in Gaza and securing the release of scores of hostages. The U.S., Qatar, and Egypt are meeting with an Israeli delegation in Qatar today. U.S. Ambassador to Israel, Jack Lew, said time is running out and that we don't know how many more chances we have to bring this negotiation back together and to have a successful conclusion.
It's of enormous urgency because it's also part of the whole question of maintaining some stability in this region and not having violence escalate.
U.S. Ambassador Jack Lew. The president of Columbia University, Manoush Shafiq, announced her resignation last night. In a letter to students and faculty, Shafiq says that turmoil on the campus has taken a toll on her family as it has on others in the community. Shafiq had been criticized during Capitol Hill hearings for her handling of protests on Columbia's campus in response to the Israel-Hamas war and also to on-campus anti-Semitism. This Columbia student, who is Jewish, reacted to Shafiq's decision to resign.
To abandon a school where your students on both sides of political issues and in the middle already feel abandoned by you just feels like all of her messages have been insincere. And I really do understand the personal toll on her. It's just disheartening for me as a student.
Katrina Armstrong, the CEO of Columbia University Irving Medical Center, has agreed to serve as interim president. Vice President Kamala Harris's campaign says she is shifting her focus to the economy with a call for a federal ban on food and grocery price gouging. Harris will travel to North Carolina tomorrow with her message. Meanwhile, former President Trump at a rally in Asheville, North Carolina, touted his economic plan, which includes eliminating taxes on Social Security benefits and tips. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Breaking news. Eric Werner will join us from Amerinic tomorrow in the celebration of Walter's Hot Dogs, 105 years. Okay, I got a photog here of a Lafayette, Coney Island, Michael Barr, diced onion, chili, I think French's mustard, hot dog. I mean, $3.80.
Yeah.
And it's a bargain. Lisa, it's like four times bigger than the Costco one. You have 5 or 6. When you go to Costco, you have 5 or 6.
She does.
Oh my
In the corner.
But does it come with the soda?
This is the immigrant, Michael Barr, this is the immigrant thing that I grew up in. I was in East Detroit. It's called Rochester. and we had Zweigelhots.
Zweigelhots.
You know Gunlock, the Bond guy?
Yeah.
You know, he grew up in the same milieu. But it's centered on Detroit. Detroit was ground zero for that killer best hot dog in the world.
Yes, it is. And it's, anybody familiar with Detroit real quickly, Detroit is the center. And when they came in off the Detroit River, that's where the highway spoke out That's why it looks like spokes, because that was the way they used to get stuff to go vice
How many
versa.
times a week were you at Dooley's Hot Dogs in Detroit? 2 times a week. You lied to your parents, right?
Well, yeah, I always lie.
So
to my
Zweigels,
parents, but that's
it's a thing, Tom, is a food
have
manufacturer
no
of hot dogs,
idea.
sausages, and deli products. The company is based in Rochester, New York.
Red and white
Founded
hots.
in 1880.
There you go.
A German immigrant. Awesome. Awesome.
We'll have more. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. A nice lift of futures after some more economic data. Right now, NASDAQ futures up more than 1%. Dow futures up 0.9%. S&P futures up about 0.8%. We have the 2-year yield, 4.08%. It was little change, now up 12 basis points. We have the 10-year yield, 3.93%, up about 8 basis points. Let's get to the data. So we had initial jobless claims came in lower than expected. 227,000 applications filed last week. That prior month revised up to 234,000. And we have U.S. retail sales picked up by more than expected in July. The value of retail purchases, unadjusted for inflation, increased 1% in July after downwardly revised 0.2% in the prior month. Now, Wal-Mart, they're seeing that resilient customer raise its sales guidance for the first year. Walmart shares up about 8%. And then you have shares of Bavarian Nordic. They're the maker of approved Mpox vaccine, up 7% in Copenhagen. The WHO declared that outbreak of the disease. Yeah, global public health emergency.
Yeah.
So that's the reason
Thank
for
you.
that. That is your Bloomberg Business Flash. Tom and Paul.
I read about it last night for the first time. We're
Me
not
too.
going to do
Yep.
it right now, but it's percolating there across the Congo and Africa is well. Two things here quickly. Percolating in New York, and Bloomberg, BNN Bloomberg has a story. Thank you, Evan Gorlick, for this. This is not a fresh story, but it gets us to Uber and Lyft strike potential.
Really?
In this August.
Okay.
And I don't have the details. I'm not going to say anything about it other than Uber and Lyft drivers are upset beyond about new policies that limit their hourly time where they can go. And that goes to the upset of the headline, Paul, we just saw on your New Jersey Transit.
Exactly. New Jersey Governor Murphy announces a fair holiday for New Jersey Transit for August 26th to September 2nd. That's nice. We'll take that. But it's interesting. New Jersey Transit recently just instituted a 15% fare increase, which was kind of a shock to us who ride it every day. However, they hadn't raised fares for 5 years, right,
Yeah.
Lisa? So,
Yeah,
I mean, it's
correct.
almost, why don't you give us 3 or 4% fare increase every year? We wouldn't even notice it.
Right, now they just hit you at once.
Yeah, so anyway, but New Jersey Transit, I'm going to be a defender of New Jersey Transit. I've been riding it for 35 years. They get me in and out of the city every day, pretty much on
Other
time.
than you and I who have no life,
Right.
who's on the train the last week of August?
Nobody.
Like
Exactly.
14 people,
Exactly.
right?
It's me. I'll be there.
I mean, joining us as well right now. This is important after retail sales. The market lifts further. Futures up 40 now, up 49, up 0.9%. Also with no life, Megan Robson joins now, BNP Paribas. She'll be working through August as well. What are you writing is sort of a launch September piece? What's your fixed income angle to message into the autumn?
Great question. Well, thank you for having me. Thanks for having me, Tom and Paul. So I think top of mind for us is, despite some of the volatility we've seen this summer, we're still expecting a credit soft landing. So we're still optimistic on the credit markets. We just had the biggest sell-off of the year in credit. A lot of that has retraced.
Was that week ago Monday
Yes.
trade? Okay. Yep.
A couple weeks ago. A lot of that has retraced. So
Okay.
in some markets, over 50% of that has rebounded. But importantly, spreads are wider now. So you're still in investment grade, for example, you're at 100 basis points above the risk-free rate. That's still about 15 basis points wider than we were for a lot of this year. So investors waiting for that sell-off, I think it's a good opportunity to buy the dip here, and so that's what we're recommending.
How much credit risk do I take here? I mean, do I go out and into the high yield market? Do I stick with the investment grade? Where do I go?
So I think there's great opportunities, I think, in both markets. So heading into a potential slowdown, a gradual slowdown, high yield can still perform very well, but we would recommend staying in the mid to upper quality. So single Bs, I think, will be the sweet spot in high yield, where you're not exposed to some of the idiosyncratic risks that we've seen in the triple C market, but you're still getting that pickup in carry.
Yep.
And then in investment grade, I think, and Tom's mentioned this dynamic several times. You have this potential technical migrating from the front end money market funds to fixed income as the Fed starts to cut rates, and I think that's going to disproportionately benefit investment grade more than high yield. So that should be supportive.
And what maturity will they migrate to?
I think the probably the front end, 5 years and in, but it's possible that people are open to various maturity buckets in order to lock in that yield. So in investment grade now, you're about a 5% yield, so comparable to what you could earn in cash. But of course, you have an opportunity to lock that in for multiple year horizon.
What sector? Are there some industries that you guys favor over BNP Paribas right now in terms of credit?
So we like, in investment grade, we're a big fan of healthcare. So we've been overweight there. We're seeing really strong deleveraging stories. So leverage actually moving down, companies being really proactive about paying down debt. And there's a lot of free cash flow there. In high yield, we do like taking some credit risk to single Bs, but in non-cyclical sectors. So I think that as we start to slow down, you could see some bumps in more cyclical areas. So I think I would stick in the non-cyclical buckets.
How is in your world, BNP Paribas fixed income, how is that linked to the equity market exuberance and this rebound that we've seen?
So in terms of the rebound, I think that we're much less earnings driven. So I think that the equity market will be more sensitive to earnings growth going forward.
Okay.
And that's been more positive. Credit is more focused on default probabilities. Are we worried about maturities being paid down? And so I think there's potential for credit to outperform if we do see earnings in the second half.
So are you
going
to high yield here? Are you being a yield hog and going out to 7% plus?
We I think high yield still offers carry at this point. There's also, of course, the election coming up, and somewhat counterintuitively, high yield could be a beneficiary with all of the talk of tariffs, where high yield has more of a domestic base.
Paul, I have no idea what I'm talking about. Bramo taught me everything.
Yeah, I know. Me too. Me too. I don't even fix income stuff. Back in the day, I covered the cable companies and the telecom companies, their equities. How do you feel about the bonds for cable and telecom?
So I think you have to be very selective in high yield.
Because they're big issuers in your market.
So in high yield, a lot of the more highly leveraged companies fall into telecom. And I think that there's a secular decline in some of the demand. So very much more cautious in the high yield space on that.
But don't you get paid for that though?
I think it depends on, name by name.
Yep,
There is
yep.
definitely a pickup in spread. The place you have to be careful is looking at loan to value. So anything with a loan to value 70% above tends to sell. We've seen tend to sell off much more when spreads widen. So I think you have to be much more selective in some of those highly leveraged names.
Quickly, what's issuance look like into the fall?
So we think it's going to slow down, and we have been wrong about this for a few months now.
That's why I asked.
IG issuance continues to surprise us, but we believe ahead of the election that a lot of the issuance has already gotten done, and IG are tracking at $1 trillion, and we do hear from issuers that they have pulled forward issuance to get ahead of potential volatility heading into the election. So it could be a positive technical as you approach September.
Oh, sorry. Yeah, good. I was just going to say, how aggressive are you in buying new issues? When the phone rings from Morgan Stanley or Goldman Sachs, do you guys pick up?
Well, of course, as BNP as a syndicate desk, ourselves very involved in the process of new issues, and I think that investors are clamoring for that new issue concession. And
how much is that concession? That's been our theme today.
Yeah, so I think it depends on. We saw that definitely increase last week with some of the issuance in the volatility, but overall these new issues have performed extremely strongly, throughout the year. So rallying to secondary market levels after issuance.
Megan Robson, thank you so much. With BNP Paribas, we look at debt today.
Smart people.
We do that with the well-timed. I messed this up, folks. Thanks to Gina Martin Adams for being here. Futures up 52, up 1%. The VIX. Could we get a 14 VIX today?
Yeah, let's get right back to your comfort zone, Tom.
That's where we are. I'm still getting hate mail over yesterday. Megan Robinson said, "Tom, never again boy bands." But we did boy bands yesterday, so here we're doing Craft from women. Alanis Morissette, giant album with Glenn Ballard, Jagged Little Pill.
Swallow it down, what a jagged little pill. It feels so good, swimming in your stomach. Wait until the dust settles. You live, you learn, you love, you learn, you cry, you let, you lose, you learn, you bleed.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. Another hour of Bloomberg Surveillance. Here were the markets lifting. Up 10, up 30. Retail sales report up 40, now up 51 points, 0.9% on the Standard & Poor's 500 futures. Dow futures up 379 points. NASDAQ up 1.2% as well. A nice lift to the market. And here's the key point. This is from the Economist, Robert Sinch. The Retail Sales Control Group, Lisa, the subset of spending that corresponds most closely to haircuts for children returning to school. What? I mean, the haircuts of our kids alone moves real GDP.
Yeah, especially when they have to bleach the hair or get these other little things, and you can turn it down to like $200 a
I remember the coronary my father had when they went over $275.
Exactly.
It was like $3, and now we're Uber to Brooklyn to, are you kidding me, Lisa?
Uber to Brooklyn to get the haircut?
Thanks for the Bob Sinch for pointing out the kids' haircuts is the reason retail sales are moving. Again, futures up 51 right now. We're going to talk to Ian Lingen here in a moment. Right now, from the Interactive Broker Studios, you need a data check. Lisa Mateo.
And we've got it for you. Futures, getting this nice boost after jobless claims for last week fell for a second week to the lowest level since early July, and after U.S. retail sales picked up in July by more than expected. That's not the only economic data we received. New York State factory activity contracted for a ninth straight month, and U.S. import and export prices, they both increased. So we have NASDAQ futures up more than 1%. Dow and S&P futures up about 0.9%. The two-year yield, 4.09%. That's up 13 basis points. The yield on the 10-year, 3.92%. That's up 8 basis points. We have spot gold lower, $2,436 an ounce. Brent crude $80 a barrel. WTI crude $77 a barrel. Wal-Mart still on the rise, now up 8%. It raised its sales guidance for the full year. Yep, raised targets for operating income, profits. And then we go from Walmart to this higher end retail. Places like Tapestry, they own Coach, Kate Spade. Quarterly profits beat estimates. Their shares up 6%. And the world's top tractor maker, Deere, maintained its profit outlook. Shares up more than 2%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Market cap of Walmart. We're used to this $3 trillion big tech stuff, Paul. Yeah. I had no idea. Walmart's market cap is $552 million. It's teens. I would have never thought this. It's teens weens.
Walmart?
Compared to the Mag 7.
Well, I don't know.
It's like small.
They're everywhere.
But what a move. 8% up here to move Walmart like that. 2.1 million employees. 2.1 million employees. We're doing a lot on bonds today. It's been very strong. Thank you for the comments out on YouTube. Again, subscribe to Bloomberg Podcast there. Ian Lingen joins right now with BMO Capital Markets. Ian, if we get an Ian Lingen market, price up, yield down, and we go below 4, near 3, dare I say 2.99%, full faith and credit 10-year yield. How do equities respond to that?
Well, I think that we've already seen that the knee-jerk response to equities with 2 lower rates is going to be higher valuations and a general sense that the real economy will go back to continuing to expand, because if we have lower rates, it is also presumably going to be accompanied with the Fed cutting policy rates. So that's good for stocks.
So, Ian, where do you think, or I guess, how do you think the Fed's going to react here come September? Is it 25 basis points? Is it 50 basis points? What kind of message do you think they may send here with their decision in September?
So I think that what they want to do is they want to prepare the market for a series of rate cuts that are 25 basis points each spread out over the course of the next 18 to 24 months. And they're not going to accomplish that by going 50. So we think that 25 should be the baseline assumption, unless something goes very awry in the real economy between now and the 18th of September, which it doesn't appear to, especially given the recent data.
So what does recent data kind of tell us, Ian, or tell the Treasury market here in terms of the health of this economy? It seems like the Treasury market, we got the 2-year Treasury now up 13 basis points here today to over 4% again today. Is a bond market already priced in a rate cut, or is there still some room to go?
Right now, the biggest debate in the bond market is whether or not the Fed goes 25 or 50. The most recent data prints suggest that 25 is much more likely. And I think that that's the reason that we're seeing the cheapening of the front end of the market, those 2-year yields up 12, 13 basis points. And at the end of the day, we know that there's a key difference between cutting and easing. The Fed can cut simply because they've been successful in reestablishing price stability and bringing inflation down. But to ease, they actually need to see the unemployment rate spike further and some weakness on the consumption side, which we haven't seen.
Ian, we've focused here is how we're going to react to the Ian Lingen move in markets. How will CFOs react to your call? How do they react? Is it like lemmings off a cliff where there's a price frenzy and everybody issues bonds? Is it price down, price up, yield down?
I think that if we ultimately get 10-year yields back closer to 3% over the course of the next year and a half or so, that will be accompanied by an increase in corporate borrowing. It's certainly going to be accompanied by an increase in refinances on the household level. So I do think back to borrowing will become the new norm once rates fall.
So Ian, as I look out here, I mean, where do you think that, I'm looking at the 10-year Treasury here, we're 3.93%, up about almost 10 basis points today. Where do you think we end the year on the 10-year U.S. Treasury?
Well, given where we are at the moment, my year-end call is really not all that exciting. We continue to forecast 10-year yields ending in a range of 375 to 395, so pretty much where we're trading right now. But I do think that there's going to be a lot of volatility within and around that area. So we could dip back to, let's call it 360, 355. But at the same time, around the election, we'll probably cheapen up closer to 410, 415.
Yeah, but Ian, I've never looked at this chart. I'm looking at it right now. I'm not going to go logarithmic because there were negative rates. I can't do it. But the answer is on a 10-year yield from a 0% 2020 pandemic low out to 5% for a cup of coffee here in autumn of last year. We come down, and if we get an Ian Lingen market, we come back to 2022. Do you look at that as dramatic as negative interest rates? Or is that still, if we get a 2.99% 10-year yield, is that still normal?
I think that a 3% or 2.99% 10-year yield is the new normal post everything that has occurred during the pandemic. It is not going to be associated with negative or zero policy rates. It's going to be a reflection of the Fed's success in getting break-evens down, reestablishing price stability, and some softness in the overall economy that almost invariably follows a hiking and tightening campaign, particularly one of this magnitude and with terminal in place for this long.
Paul, what does real estate do if we get to Lingen's new normal? Because we're all going to say we're never going to see negative rates again. It's going to be like the gift that keeps on giving to holders of assets in America.
Sure. I mean, and you get lower, rates coming down, earnings still solid. I mean, that's generally pretty good for risk assets, I would think, Tom.
Let's see. One more.
So, Ian, let's think about it here. I mean, when the Fed begins to cut rates, how do they proceed, do you think? What are you hearing from your clients? Do they front load it? Do they do 25 basis points every meeting or every other meeting? How do you think that plays out?
Well, there's two camps in this regard. One set of clients believes it's 25 basis points every quarter until they get back to some version of neutral. Let's call it 275 or 3%. The other camp is looking at some of the data the spike in the unemployment rate, some of the anecdotal evidence suggesting that they need to front load it. They need to go 25 at the next 3 or 4 meetings just to start the process of getting us back to neutral. And it's important to keep in mind there's a meaningful lagged impact of monetary policy. So for all intents and purposes, cutting in September won't really impact the real economy until the second half of next year.
Ian Lincoln, thank you so much. Greatly appreciate it. Ian Lincoln with BMO Capital Markets. Just terrific framework by our team today to look at where yields will go as we set up after Labor Day. Futures up 52, now up 48, 0.9%. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Vice President Kamala Harris's campaign says she is shifting her focus to the economy with a call for a federal ban on food and grocery price gouging. Harris is expected to lay out her economic platform in North Carolina tomorrow. Meanwhile, former President Trump at a rally in Asheville, North Carolina, touted his economic plan, which includes eliminating taxes on Social Security benefits and tips. Then Trump went off his economy script and slammed Harris.
Everything Kamala Harris touches turns bad. It all turns bad. San Francisco was a great city. Now it's unlivable. California was a great state. Now it's unlivable.
Trump also called Harris crazy. Mediators are holding a new round of talks aimed at halting the war in Gaza and securing the release of scores of hostages. The U.S., Qatar, and Egypt are meeting with an Israeli delegation in Qatar today. Columbia University President Manu Shafiq announced that she will be resigning from her role. It comes months after student protests on campus stemming from the Israeli-Hamas war. Congressional members are reacting. House Speaker Mike Johnson said in part her resignation is long overdue and welcomes the news. Finally, smiling Yankee fans. They beat the Chicago White Sox 10-2. New York's Aaron Judge. He stepped up to the plate. Here comes the Judge.
3-0. Judge drives it. Deep left field. Way back and gone. Goodbye. On a 3-0 pitch, Judge lasers home run number 300, the fastest ever to hit that mark.
So after Lisa Mateo said, I'm doing this for papers, and I said, no, wait, let me have this for sports. WFAN was called, by the way.
Argue about
this.
You
Yeah.
Lisa, have you ever taken a swing at him?
Not yet.
True story. I go to Yankee Stadium with my friend Carl. Carl is such a hitter. He goes, I got the seats. We're literally in the first row next to Joe Girardi in the on-deck circle. We're down with the celebs. Great, thank you, Carl. And there's this thing in the on-deck circle, and I knew nothing about this guy. And for those that have seen, all the baseball players are huge. Just the littlest guy in the field is huge. But that he's hit 300 homers, I don't think is a surprise. Has he ever done it one-handed? Some people can do that.
It looks like every time he goes up to the plate, it's like with a table leg as a bat.
Why they pitched to him? Why they pitched to him? I don't know.
But you know what? Now wait, the pitch that they gave him, because I looked at it, it was on the inside. It was out of the strike zone on the inside, and he tattooed that thing. Pow, blam, zip.
3-0 pitch.
Cy, I was going to do some Tottenham soccer chat here, but Barr just rolled right over me there.
Steamrolled you
with the dreaded Yankees thing.
Yeah, exactly.
Can we have a moment of silence here for A-Rod? Because A-Rod's right up here in the statistical mix of 300 home runs quickly.
Yeah.
What he did with Jason Kelly with Bloomberg was really good.
That was good stuff.
Futures up 50. Dow futures up 412. Aaron Judge driving the market higher. I can't believe I'm saying this. Weren't they terrible like 5 weeks ago?
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks climbing, yields soaring after the latest reading on retail sales showed the strength of the U.S. economy. So we'll get to futures first. NASDAQ futures up 1%, 207 points. Dow futures up 0.9%, 387 points. S&P futures up 0.8%, 48 points. The two-year yield 4.10%, up 14 basis points. The yield on the 10-year 3.93%. That's up 9 basis points. So the data showed U.S. retail sales rose in July more than expected in this broad advance. A separate report will show jobless claims drops to the lowest since early July. Moving the markets, Ulta Beauty up 12%. Warren Buffett's Berkshire Hathaway added just short of 700,000 shares in the company during the second quarter. And then you had Bill Ackman's Pershing Square Capital. They were busy too. They took a new stake of about 3 million shares in Nike. Shares of Nike up about 5%. And Chinese e-commerce retailer Alibaba ADRs down 2%. First quarter revenue weaker than expected. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. I guess, we should do Wal-Mart or Big Box or talk about Bergdorf Goodman. No. Dana Telsey joins us right now. And for Lisa Mateo and Tom Keene, who have children in Ulta Beauty, why? Dana Telsey, you have an outperform on Ulta Beauty. Warren Buffett listened to you. Why is Ulta Beauty the future of my paycheck going out the door?
Because first of all, thank you for having me, Tom. Great to hear and see you. I think, first of all, when you think about Ulta Beauty in the beauty category, it basically appeals to so many different ages. You look at the categories within it, whether it's skincare, whether it's makeup, whether it's hair care, a lot of innovation. You see that your daughters, they're basically being attracted by all the new initiatives, all the new brands that are out there. There's a sustainable, clean emphasis on it also. And people have fun with beauty, especially today, given that we live more in a Zoom society than we did pre-pandemic. So whether you're seeing people in person, whether you're seeing them on Zoom, Ulta Beauty gives the opportunity to look good with all different brands and all different categories.
I'm glad we have hair routines you'll love. Their best back-to-school hairstyle. Great. What are they doing? Why are they distinctive versus Sephora to Mr. Buffett?
A couple things. First of all, the stock's come down a lot. It used to be trading at around 40 times. Now it's trading below 20 times. You think about their customer base. They offer from mass to prestige, so a wide income span. They have hair salons, so people go there for services too. When you go for a service, there's an attachment sale that rings up with it. When you look at their locations, they have very close destinations, and a lot of them are outside of the mall, so they're convenient. And now with a new 5,000 square foot box that they're testing, there's even potential to go into some smaller areas. So you've got breadth of categories, you've got closeness and convenience, and you have mass to prestige. And with that, you have the grandmother, the mom, and the daughter.
Hey, Dana, I'm looking at Walmart here. They reported numbers here this morning, beating estimates. They raised their sale guidance for the full year. The stock's up 9% pre-market. What did you take away from our friends in Bentonville?
I thought overall, excellent execution. And look what they're doing. They're gaining share. If they can say they've gotten a bigger share of the wealthier consumer and they haven't seen any weakness in some of their core customers, what does that mean to me? The dollars that the consumer has, they're allocating to Walmart, and their more effectiveness in their category offering, in their price offering, and the meaning of value, they're a share gainer.
Dana, I want to talk about luxury here because there's a lot of negative talk about it, and there's other things doing well, different companies, selective. But I'm witnessing a name I didn't even know, Roger Vivier. Basically, folks, I'm going to editorialize, is on fire. They've got a thing with Laura Dern they're doing with her daughter, and their internet exposure of shoes nobody can afford is like unbelievable. Really? Dana, give us one vignette about how a brand like Roger Vivier gets a moonshot in the summer of 2024.
Man.
I think what you said, a little bit of collaborations of who's wearing it like Laura Dern. Check out their store on Madison Avenue, which they recently reopened, renovated, and you have a very iconic offering in terms of what their shoes are, and certainly the emblem that's attached to it, and they've modernized it. This is an example of intentional buying of brands is driving demand. And you have intention there. It's an iconic offering, and it's back in vogue again.
How can our listeners and viewers profit from things like Roger Vivier?
I think overall, when you think about some of the luxury brands, you take a look today, Tapestry's results were very, very good. High gross margin, new customers are transacting at a higher average unit retail selling price. So when you think of brands that they say what they do what they say, and they stand for something, I think you have, whether it's LVMH, I don't think that while their sales growth may have slowed, the brands and how they innovate and create demand, it's something that's so unusual and compelling.
Dana is such a retail animal. Did you hear what she just said? She said customers are transacting. That's Dana Telsey talk for spending money, just to clear that.
And Dana, I have no idea how Tom Keene knows about Roger Vivier shoes, but the Viv Skate Metal Bucket sneakers in soft leather and white, retail $1,075.
No way.
Yes, there you go. Sneakers $1,000. There you go. So talk to us about, Dana, about in the luxury category, where's China? Where are the Chinese consumers these days?
Slowing down. The Chinese consumers are slowing down. They're spending within China. They're not traveling as much as they had. A lot of them are buying some local Chinese brands, and companies are having to work harder with their marketing dollars in order to win business from the Chinese customer. And you've seen it among many different brands out there. There's still opportunity going forward in China. And I think the specific marketing to that core consumer within China is really what's going to win the day. And we're seeing companies refocus on that.
Are companies still, I mean, again, China's a huge market. It's been a huge driver of the luxury space. How do luxury companies, how do they operate in China? Are they still investing in China? Because a lot of industries away from retail are really concerned about that.
They are concerned about it, but yes, they are still investing. The ability to have a physical footprint basically provides the brand awareness. Have goods that are exclusive to China is key, because when these Chinese are traveling outside of China, they have to know that they're getting exactly what it looks like in China and its authenticity. So being able to show what that brand aesthetic means is key for getting them to transact in other places when they travel.
Dana, the Telsey Advisory Group thoughts on Walmart, its future out 5 years.
Stronger and bigger, and being able to capture a wider consumer base. The physical footprint will be even more omni-channel than what it is today. And I think the marketplaces area and the whole omni-channel initiatives are going to be made easier. I think the seamless ability of Walmart to capture more households, what you're seeing now with even wealthier consumers buying from Walmart, makes it easier. It's value and convenience. That's the synonym for Walmart.
Dana Telsey, thank you so much. Just brilliant there, particularly.
Always.
I really appreciate the Ulta conversation. Lisa and I will commiserate over that. You know, Ulta, if they really wanted to expand, you put in a bar there. For the parents.
Exactly.
You know, parents can go in and sit at the
Well, all I remember, Tom, is during the height of the pandemic, when the city was shut down, the retail was shut down, the Sephora store across the street.
Still popping.
Traffic every day. Unbelievable.
And now they're with Kohl's. They're in with Kohl's too.
Are they
so
with
that does
Kohl's?
help. Sephora's in Kohl's.
Okay. Well, we have 52 bottles in the bathroom. Dana Telsey, thank you so much. Greatly, greatly appreciate it. The Vic, what do we, Paul? Come on.
I know. 15 handle on the VIX.
Has
there,
anybody
Tom.
alive ever seen this?
No.
I don't think so.
No. I mean, again, a week ago Monday, 65 on the VIX. I mean, for a nanosecond in the morning, but yeah, what a move there. And again, as I guess now with hindsight, Tom, the pros are telling us it was primarily a technical thing there last week. So here
I'm not going to give my opinion. I have a very strong opinion. I guess I'm right so far, but I could be wrong by 4 p.m. this afternoon. The yen weakens out dramatically off retail sales. DXY 102 to 103, and the yen, very important. I'm going to get a 149, 148.92 on the Japanese yen. That's a big 1% weaker Japanese yen, stronger U.S. dollar. We need to get the markets open. Futures up 51 on YouTube. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene, Paul Sweeney with your opening bell report. So this morning, investors, they had a ton of economic data to consider before the bell. Initial jobless claims, they came in lower than expected. 227,000 applications filed last week. The prior month revised up to 234,000. The value of retail purchases, that increased 1% in July after downwardly revised 0.2% the prior month. So let's see the reaction on Wall Street as we get to the open. We'll start with the S&P 500, up 0.9%. 52 points, 5,507. The Dow up 1%, 406 points, 40,420. We have the Nasdaq up more than 1%, 202 points, 17,391. Then we go over to the 2-year yield. It's at 4.09%. That's up 13 basis points. The yield on the 10-year 3.94%, and that's up 10 basis points. Checking with spot gold, higher, 2,448 an ounce. We have Brent crude $80 a barrel, WTI crude $77 a barrel. Quick check of currencies. Dollar stronger. Japanese yen down 1%, 149.05 against the dollar. The euro weaker. British pound weaker. We have Bitcoin at 59,000. All right, at the open, of course, we want to check in with Wal-Mart. They are up 7%. That is your Bloomberg opening bell report. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. We'll give you more data checks here as well. And the opening here at 9:31 is a lift off where futures are. Futures still pricing up 61. Dow futures up 500 points. This could not be better timed. Payton and Regal is an institution of Los Angeles, and back to Amundsen, and who were great supporters of mine years ago, Capital Guardian Trust.
Yep.
It is the optimism of a Western finance that a lot of people, particularly here on the right coast, aren't aware of. The left coast, San Francisco,
Robbie Stevens,
Robbie Stevens, and all, and down to Los Angeles. Jeffrey Cleveland joins now with that optimism on the American economy that you get out of Southern California. Jeffrey Cleveland, frame your optimism now after retail sales and after recovering from the emotion of 9, 10, 11 days ago.
Yeah, good morning, Tom. Good morning, Paul. Moving and shaking here on the West Coast, figuratively this morning, not literally like we were earlier this week. Retail sales, the context here is that people were calling me, Tom, they were texting me and early part of last week and saying that the Fed needs to get in with an emergency rate cut, maybe a 50 basis point move, because the economy needed it. And I had my doubts about that. We're still more upbeat. We're in the soft landing camp, but this data does not warrant, definitely doesn't warrant an intermediate cut, definitely not a 50 basis point cut. The U.S. consumer continues to spend. I do admit this is mostly goods, but even within the retail sales report we got today for July, the services category, restaurant spending, that was up. So it's roughly 30% of consumer spending. So it's a good story. And I think it pushes back against a lot of these more dire narratives that we had been hearing.
So, Jeffrey, given that backdrop, what do you expect our Federal Reserve to do come September?
I think inflation has cooled. So it is reasonable to fine tune the Fed funds rate. They don't need to be at 550. But I think that's something more like 25 basis points per meeting over the balance of the year, and then maybe once per quarter next year. That's much more of a soft landing. What the bond market was pricing in was a much steeper, faster rate of cuts. And I think what the most bond investors were thinking was that we were on the cusp of, or maybe even in a recession. I've heard that from clients and from competitors in the last month because of the uptick in initial claims. And as you well know, this morning, we also got, my favorite weekly data drop, initial claims, which are back under 230. And, maybe suggesting that people were getting a little too excited prematurely.
So, Jeffrey, again, we had the retail sales today came in a little bit better than expected. How do you think about kind of the consumer out there? I mean, obviously a lot of folks are hurting there. A lot of folks are under pressure, but other parts of the economy are pretty darn strong. How do you think about the consumer when you look at a retail sales number, when you look at the Walmart numbers, for example?
Well, we just look at overall aggregate income growth, Paul, and we think about how many people are employed, how much work they're doing, what they're getting paid. And when you look at that, incomes are growing in aggregate around 5%, maybe a little bit above 5% on a year-on-year basis in the latest month of data we have through July. And we know the U.S. consumer is good on spending, not great on saving. So income growth is what matters most for our view, and it's held up. So I think there are pockets of weakness, but the consumer will be able to spend. Maybe there has also been a shift in the composition of spending. So as interest rates are higher, people are holding back on maybe home renovation purchase. They're waiting for those rate cuts to get into that game again. But for now, they're spending more on experiences and travel and services. Right. So we're seeing a shift.
The Wall Street Journal and their spectacular mansions thing that they do, they got the houses in there. Yeah, everybody loves it. I mean, Lisa actually put in an offer on something a couple months ago.
Didn't quite hit it though.
Down in Florida.
Congrats.
Out in this small burb, Carmel, out in California, they had an actor, Clint Eastwood's house. That was spectacular. Mrs. Keene said, "Can we do that?" I said, "I don't think so." But the answer is, I look at California is always, through my childhood, the foundational forward motion of the nation. And Jeffrey Cleveland, is California showing us a polarity of demographics, of political economics, a polarity of the haves and the have-nots that's the future of the Jeffrey Cleveland America?
Well, look, in the last couple of years, we have seen a population flight, people leaving California, maybe going down to the Texas Space Coast. We have seen firms leaving California. And as a consequence, the unemployment rate in California has moved up. It's around 5.2%. So almost a full percentage point above the national average, as you know. Are there any glimmers of hope? Yeah, yes. Actually, California, there's always something going on, Tom. That's what's so interesting. Even in our backyard.
Yeah, I don't mean to interrupt, Jeffrey, but this is too important. To me, there's a mother of all polarities in California. In that I get it. California's really in trouble. Chevron to Texas, blah, blah, blah. But at the same time, I'm seeing boom housing in selected areas. Is that polarity here to stay?
Yeah, I think we have a severe housing shortage. Much of that is due to local building restrictions. So if you are in California, a lot of what can be built in any given city is dependent on zoning restrictions, building restrictions at the local level. So city by city, Tom. So what we need, we're getting more of interest in. So I'm surprised in the election it's not getting more interest. I think should be priority number one in California is building more, freeing up the land use restrictions, and that will help ease the cost of housing, in my view. But I wanted to say, we are having some interesting things going on in and around Southern California. If you go down to El Segundo, for example, there's a lot of hard tech firms that are, new startups that are coming online. So as opposed to maybe the Silicon Valley scene with the software. So I think that could be something interesting. Boosting, U.S. investment and manufacturing activity. So we're going to have to keep an eye on that. So amidst the gloom, there is some interesting things going on in California.
Here's some more positive things. Number 3, Sweeney Offspring recently moved from Denver to L.A., so he's gainfully employed
exactly.
there. He's contributing to
the middle child's in L.A.
Yep.
The weather is amazing.
I spent like $5 million in education, and here's your key phrase: "May I help you?"
Right, exactly. I mean, we got the Walt Disney Company, increasing their investments in Disneyland and Disney World. So Jeffrey, as we think about it over the next several years, what's a reasonable GDP kind of growth forecast for you folks at Payton & Regal?
We still think we're in a 2.5% growth range here for the next few quarters. So that's more of a soft landing. The unemployment rate could stay low, and inflation will moderate. The Fed will cut a little bit, but we don't need it's not a dire situation. We don't need a huge amount of rate cuts. So there is some repricing, Paul, that I think needs to go on in the bond market. The front end is still pricing way too many cuts out over the next 12 months.
Jeffrey, we got to do a road trip to LA just to see Jeffrey Cleveland.
Sure. You're always welcome here.
We'll go down, Sunset Strip and all that.
Yep.
Jeffrey Cleveland, thank you so much. Greatly appreciate it. I love folks getting the opinion of the West Coast. They're just totally, I think, Paul, you know it better than me with all your traveling out there.
There's obviously, California is probably 8 different economies in one, given the size of the state. You go up to Northern California with Silicon Valley, and it's all about technology. And what I love about the people in Silicon Valley, and it rubs some people the wrong way, but I love it, I embrace it, is they feel like technology can fix any problem. It is the solution to everything is technology. Basically, guys, don't worry about it. We'll take care of it. I love that view. Southern California with the heritage of so many industries, aerospace industry, Tom, in addition to the entertainment industry. So much going on there.
I am so in the timeout chair right now. Somebody had out a great Bruce Springsteen video, which I remember years ago and loved it. And I just assumed black and white acoustic guitar, that it was from Nebraska,
right?
Which is my
Sure,
favorite
yeah,
of all
sure,
time.
sure.
That and Meeting Across the River. And so I put out a tweet, listen to Nebraska, because the kids like Lisa. Lisa, you don't know what Nebraska is, do you?
No.
You have no
It's okay. It's all right.
I stand corrected, folks. Ton of love.
Yep.
The world of Bruce Love is just on me today. They're just killing me.
Yep.
I failed. The market is not failing. The Dow up 1.2%. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul Lisa, Columbia University President Manu Shafiq announced that she will be resigning from her role. It comes months after student protests on campus stemming from the Israeli-Hamas war. Congressional members are reacting. Bloomberg government reporter Jack Fitzpatrick.
Speaker Mike Johnson also said the resignation was long overdue. So it was something that got a response from significant congressional Republicans and is something they want to keep in the public eye as we get closer to Election Day. And the timing of this particular decision was surprising, but still definitely fits into a Republican narrative.
Bloomberg's Jack Fitzpatrick. President Joe Biden will return to the campaign trail to hype Vice President Kamala Harris for the White House. They will take the stage together today for the first time since Biden ended his re-election bid and endorsed Harris. They will tout prescription drug savings under the president's signature Inflation Reduction Act. It will unveil more on Medicare negotiations for the price of 10 prescription drugs. Editor-at-large of Public Health of KFF, Dr. Celine Gounder.
For many seniors, being able to afford the out-of-pocket costs of medications can be a real financial burden. And the hope here is that by being able to negotiate directly with the drug companies to reduce the prices that Medicare has to pay for certain medications, those savings will also be passed down to Medicare beneficiaries and taxpayers as a whole.
Dr. Celine Gounder spoke to CBS. Tomorrow, Vice President Harris's campaign says she's shifting her focus to the economy. At a stop in North Carolina, Harris will call for a federal ban on food and grocery price gouging. Meanwhile, former President Trump, at a rally in Asheville, North Carolina, touted his economic plan, which includes eliminating taxes on Social Security benefits and tips. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. The stock market ebbs away. I'm kidding, folks. Up 1%. SPX up 52. Dow up 455. Paul, the VIX from the Monday glory that you enjoyed.
Yep.
And this is not pro math, folks. This is bad math I'm doing, but it's good for showbiz. Is down 77%.
Yep. How about that?
The VIX is, I've never quoted that in my life. It's bad math, folks. I'd be in the CFA timeout chair on that. But the bottom line is a percentage change on the percent statistic, the VIX. We're down 77%.
Yep. It's just extraordinary. And it was
never seen it.
Yeah. And I guess that it was just a technical pop.
Flash crash?
Fracture in the market. Yeah, kind of a little bit of a flash crash. And it was really just in the first few hours of trading on that Monday. By midday, the market had stabilized and kind of started, stabilizing around midday, and then the rest of the week was solid, and here we are, right back at the 5,500 on the S&P.
I got to redeem myself with a fitted standard. Michael Barr's taking notes. Fitted standard deviation study on Wal-Mart. I'm fitting it right now on the TE screen. For those of you listening in your car, Wal-Mart with the high today is 3.6 standard deviation. Yep, 3.6 standard deviations higher. Again, never have I said that. That's extraordinary. Walmart's $73 per share. The Dow up 436 points. NASDAQ up 1.3%. From New York City, this is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks getting a really nice boost after jobless claims for last week fell for a second week to the lowest level since early July. And after retail sales advanced 1% in July, the most since early 2023. That's not the only data released this morning. New York State factory activity contracted for a 9th straight month. U.S. import-export prices both increased. And U.S. industrial output, that declined in July by the most since the start of the year. So let's get to the markets and see the reaction to all of this. We have the NASDAQ up more than 1%, 213 points, 17,407. The Dow up more than 1%, 422 points, 40,427. And the S&P 500 up 0.9%, 49 points at 5,504. The 2-year yield at 4.09%, that's up 13 basis points. The yield on the 10-year 3.94%, and that's up 10 basis points. Want to check in with shares of the world's top tractor maker, Deere, up 4%. The company maintained its annual profit outlook. And Bloomberg reporting about what it's calling, quote, a worrisome trend. Listen to this. This new study shows Americans appear to be taking money out of their stock brokerage accounts to fund their online betting. It's happening by the most financially strained households, so that's where they're starting to see that trend switch. That is your Bloomberg Business Flash. Tom and Paul.
I've never gotten a free lunch of that. I think it's like, we have a great guy at Bloomberg Intelligence on the whole betting thing.
Yeah.
I mean, I remember when you couldn't bet on anything.
Oh, I know.
Remember, standing in Las Vegas at Caesar's Palace going, oh, this is what it's like. And now it's everywhere.
Yeah. You do it on your phone.
Yep, absolutely.
Yeah, I've never done it once. Just think about, it's not in me.
Think about pro sports and Las Vegas. They wouldn't touch them for generations.
Yeah.
Now they're all over Vegas and vice versa. Now they got, so who knows?
We need to frame something right now. I've been remiss, folks, with the Dow up 410 points, the level 40,400, SPX 5,500, VIX 15.10. But with Matt Miskin of Johnny Hancock, their co-chief investment strategist, we can do this. NASDAQ 100, 12 months trailing.
Yep.
Up 28%. The Dow, I just messed up I'm not as good as Sweeney.
Yeah. Oh,
I'm not as good as this. The Dow up 16%.
Solid. We'll take
Standard
that.
Poor's 500 underperforms the NASDAQ by only 300 basis points, 24%. Matt Miskin, that defines a bull market. Does Johnny Hancock feel that this bull market will continue?
We are overweight U.S. equities. So if that answers the question, then we do think that this bull market keeps going. The music is still playing, Tom. As long as initial jobless claims stay under about 300,000 and high yield spreads stay low, the music is still playing. That means the economy's not in the recession. That means the market likely continues to make its way higher. What we're seeing in terms of initial jobless claims falling is bringing down high yield spreads. You talked about just this volatility of the VIX. I love the percentage decline that you mentioned, but what we're seeing is basically it was a fake out. It was a just kidding formation across high yield spreads and the VIX. And now here we are back again, and we're just back to this normal, probably relatively slow growth, decelerating inflation, and the music's still going.
The music's still going. That's brilliantly said. Matt Miskin, I look at this and I think of, do you in the day-to-day grind of the John Hancock Company, whether it's old John Hancock or new John Hancock, in the day-to-day grind, do you feel so many people are missing this bull market? Are we actually all participating?
When we talk to investors, overall, they're pretty conservative right now. Last year, the number one most popular investment was cash. This year, it's bonds. And in our view, still, there is a lot of cash on the sidelines. There's $6 trillion in money markets. There's about $15 trillion in bank deposits. Corporate cash is $5 trillion. We've got $2 trillion in private equity dry powder. There's a lot of cash on the sidelines across the board. We're just trying to talk to investors how to allocate that capital, lock in these attractive rates that you're getting on the short end. We don't think they come down overnight, but into 2025, we do think rates are meaningfully lower. And we want to take advantage of these yields while we got them.
All right, Matt, in the equity space here, we're pretty much through the earnings cycle here. what did you learn from earnings, and kind of did that change at all your outlook for these markets?
So overall, not bad. I mean, we had about 10% earnings growth is what we're tracking. That's pretty impressive. Last year, earnings growth was flat. Q1 was about 6. So earnings coming in pretty good. But what also happened was if you missed earnings, you got smoked. That's what FactSet earnings data shows, is basically those that missed really saw a big decline. You got to be in those higher quality parts of the market with good profitability, good balance sheets, higher ROE, stable earnings. So we still like the quality factor. That's bringing us to mid and large cap U.S. overweights. We are underweight small cap. Not going to feel good on a day like today, but small caps have struggled because they're less profitable. Small cap earnings are down 15% year over year.
Really?
So S&P earnings are up 10. That to us means you got to move up in cap to mid and large at least. And international also hasn't seen as greater earnings. So that's what we're focusing on. Best earnings growth, mid and large U.S.
So sectors, are there sectors that screen well for you guys these days? Are the portfolio managers at John Hancock, are they maybe overweight certain sectors versus others?
Yeah, we are seeing more of a quality tilt in large cap to technology, communication services. They're not shying away too much from the Mag 7. There are some in there that are, for example, electric car companies that are very expensively valued. That's not a favorite of them. But the higher quality ones, yep. And then in mid-cap, we are actually seeing a lot of appetite for actually Midwest industrials that are playing out the manufacturing renaissance we're seeing across the U.S. We think this is massively undercovered with the AI news, but actually the Midwest is booming. We're seeing manufacturing really come back, and we're playing the industrial companies that are building out these massive manufacturing hubs.
One final question. The markets are moving, so Matt, we got to do some data checks here. But Matt Miskin, healthcare finally popped. Can you guys say you're long or overweight the healthcare sector led by United Health?
We are overweight healthcare, and the insurance companies are relatively cheap. You're getting a dividend. The price, the valuation is about a 10% discount to the overall market. They've got relatively strong earnings growth. They've got an earnings growth recovery story. And it's things that people need versus what we want. A lot of this, it's like, oh, we've got a consumer staple company that's doing well, but we have a consumer discretionary company that's really struggling. For us, healthcare goes into that, what we need. And we think that's actually stability in earnings, which is something we like.
Matt, thank you so much. Matt Mishkin with us this morning with John Hancock. And we just got to leave it there because with the Dow up 420 points, 1% move, NASDAQ up 1.6%. And Paul, you're looking for confirmation here of what we're moving. And I'm not saying, folks, buy, hold, sell. We're just reporting what we see off the Bloomberg launch pad. But in the currency market, I've got abrupt dollar reversal from a 102 level on DXY out to 103 in the yen. Absolutely crushed this morning, printing moments ago a 149.09 Japanese yen. So there's some interesting nuances out there.
Absolutely, Tom. And just looking across the yield space, we've got some moves there as well. The 10-year Treasury is off 29.30. That pushes the yield on the 10-year Treasury up to 3.94%. That's 11 basis points. Even more so on the shorter end, Tom. The 2-year Treasury up 14 basis points. Let's call it 4.1% there on your 10-year on your 2-year Treasury.
I mean, we'll just have to see. Did I tell you earlier how I'm in such the Bruce timeout chair?
Are you?
I mean, you've seen Bruce, what,
38 times? Yeah, sure.
38 times. Yeah. This weekend, I have to go back and listen in entirety to Tunnel of Love.
Yeah.
I forgot about it.
Yeah. There's
and
so many
it's like this iconic album that I adored, in 1987 is when it came out.
Yep.
Thank you, folks. A lot of people emailing in. I sort of mixed up Tunnel of Love in Nebraska, which is stupid on my part. But,
so much to choose from. I mean, and he continues to put out.
I
think the last 10 years have been the most prolific of his career. I mean, in terms of just volume of music.
You saw him at Broadway.
Yeah, that was fantastic. That was right when the city reopened. The first thing that reopened in the city was Bruce coming back to Broadway. We all went in there.
Cool.
It was great.
Very cool. Dow 400 points. Another eventful hour coming up on Bloomberg Radio. Good morning. Oh, New Jersey Transit's free. It's perfect, Bruce.
That man sitting on a little stool takes a Money from my hand while his eyes take a walk all over you.
That's the line.
Hands me 2 tickets, smiles, and whispers good luck. Well, cuddle up, ain't